meditate on this. The subconscious mind is like a black hole. It's a vacuum. It pulls in everything that crosses its path. The portals or gateways to the subconscious mind exist on the human body, in the human body. Some of them are called ears, some of them are called eyes. And you receive certain signals and things and messages, etc., through these senses, through these tools for senses, sight, hearing, etc. But no matter what you do, no matter what you put in front of your ears, no matter what you put in front of your eyes, just understand that the subconscious mind is going to receive that and it's going to be embedded within you in perpetuity. It's going to be with you forever. And the people in power know this. The ruling class know this, and they do a damn good job of putting things in there that are not going to lead to quality of thought. It's important that you take control of this and try to embed things with high quality of thought into your subconscious mind, so that when they come back to the surface, when they come back, they pop out on the other side, they're fruitful. The things that are good for you, things that lead to quality of thought. So try to embed good things in your subconscious mind. Now that we know we have to program the subconscious mind, do that consciously, the next question becomes, with what? I believe we need to start with music. Music is very natural. Everybody loves music. They're even treating dementia with music, because music can take you to the past, bring you to memories, the vibe. Everything is just seems to come into focus clearly. It's easily visualized when you put music and have a soundtrack to your life. And so what type of music do we listen to? You know, it's part of our daily ritual. It's part of our daily dealings in programming the subconscious mind. The type of music we listen to is very important. And think about quality of thought. Is your music going to nurture the idea of quality of thought? Or is it ratchet? Is it supremely ghetto? Is it trash? Or is it breathing life into you? Right? It's the difference between listening to, you know, something that's promoting death as to something that's promoting life. Looking at some of the neurological effects that happen when you listen to certain types of music, nourishing the brain with that type of music. The TV shows you watch, the movies you watch. What type of shows do you watch, and how are you inspired by them? What are the images that are being implanted in your subconscious mind from the movies and TV and the media that you watch, from the things you watch on YouTube, etc., etc. If you look at one of those controversial stories about TikTok, I said that Chinese people, or the Chinese Communist Party, whatever, has a different algorithm than the one for the Western nations. The one in the Western nations, the kids are watching videos that go viral, doing pranks and all types of silly stuff. And China's algorithm is showing kids completing puzzles and doing math. These are the things they're promoting because they understand the programming of the subconscious mind is very important for the future of your people and where they're going. So with that same concept in mind, you know, what type of media are you always being influenced by? What type of media do you constantly force yourself to be influenced by? You know, what if we saw images of love all the time instead of images of destruction, war, etc., etc.?
What type of media is Hotep Jesus influenced by?
I like the old stuff. I like the classics. Mostly written work, literature. That's the type of stuff I listen to. I listen to a lot of lectures. You know, one of my favorite lecturers is John Henrik Clarke, Dr. Kaba Kamene. Those are like two of my faves. I like listening to scholarly work, scholarly teachers. I go to bed to to chess videos, but I also need some gangster in my life. You know, I'm not perfect, but I need some, you know, I need some cartel gang member, you know, type programming. This is, you know, that's the stuff I happen to like. You know, I like violent movies. I like heists. I like heist movies, like The Italian Job and Ocean's 11 and, you know, those types of things. I like military movies. Like, I thought the new Top Gun was amazing. But I also try to be conscious of what I'm seeing, and so, you know, what's clear is we're gonna come across some content that is not going to nurture quality or high quality of thought. So what we have to do is we have to wrap this stuff with labels. So what you can do is when an image appears before your subconscious mind, what we can do is we can frame it. So when it gets embedded and it gets stored within your mental hard drive, it's filed in a folder, you know, marked bad, marked good, marked to question, marked, you know, you can label these things. So sometimes when things come into our subconscious mind, we don't frame it, we don't put a label on it. I think we have to say, okay, if I'm watching a movie and they're murdering people, let's say for instance, as we're watching this, we got to label that bad. This is bad. This is no bueno, right? And even some labels that your personal opinion might weigh in on, and how you manage this stuff logically. So even though everything is going to be received by your subconscious mind, and some things you may enjoy, some pieces of content you may enjoy, it's very important to frame that stuff and label that stuff. So when it gets into your subconscious mind, your subconscious mind knows, okay, this is this and this is that. So it knows clear difference. It's not just sitting there to be sprouted later on in the wrong manner or intent. What is your receptivity? Are you receiving the signals, or are you only transmitting them? You have to tune your inner radio to receive messages, not only send them. Sometimes we get caught up with our conscious mind. Our conscious mind is constantly sending signals out to the universe, to God, to friends, family, etc., etc. But sometimes you have to reset yourself and come back to zero and just say, I'm not intending to send any messages, I'm intending to receive them. I call it no mind. I've spoken about this in the past. I want to open up the mind, enter a state of receptivity, to receive the signals, to be imbued by God. Messages, prescient visualizations, to be omniscient. All these things are made possible by entering a receptive state, by dismissing the world and all of its physicalness, dismissing the world and all of its 3D-ness, dismissing the matrix, forgetting you are of this physical.
Yeah, I can try to get that handled for you. Again, it's only my second day, so if you can give me a second. How I'm supposed to do this? How the hell are we supposed to do this by 5 o'clock?
I have no clue.
Is that possible? Hey, do you have the password to... How'd you finish all your work already?
He's not tapped in. How'd you get that done so quick?
They think they're gonna be able to budget that?
It's money. That's money right there, you understand?
You guys finished your work 6 hours early? He's not tapped in.
In the past 30 days, this channel has generated anywhere from over $600 to over $10,000, and they did that with a faceless YouTube channel.
What's up, people? We got to keep an eye on our government. I'm here to report on it. Hearing starting soon. The Grift report starts now.
2, 1, boom. Hotep Jesus.
Of all the Jesuses I know, he's the Hotepiest. Social scientist and YouTube host, Hotep Jesus.
How the fuck do you get a name like Hotep Jesus?
The one and only Hotep Jesus.
Ryan Sharp, better known to the world as Hotep Jesus.
Hotep Jesus. Hotep Jesus. Hotep Jesus.
Hotep, you're a genius. HotepJesus.com.
Somebody said, "What do you think you are? Some kind of Hotep Jesus?"
Ooh,
And I
that's
was
good.
just like, ooh, that's sexy. Yes, I do think I'm Hotep Jesus.
What's up, people? Make sure you hit the like button on the way in. Make sure you hit the like button on the way in. How should I do this? Let's we're waiting for the hearing to start. So let me put this to the side so I can see that, and then we'll go over some Grift report stuff while we wait for the hearing to start. Hold on, let me switch this. Let's switch this to there. Okay, good. So that looks good on your screen. Let's shut that. Let's open this. Let's change this. Let's go. Hold on. Let's put this. All right, here we go. All right. So what we got in the bag while we wait for the hearing to start? That's our government. And government is not efficient enough to start on time. Like, what is this? What is this? First of all, we got to get to the most pressing issue of the day. Do real men use body wash or bar soap? I said real men don't use body wash. They use bar soap. I need y'all to deliberate. This is a very important question. The fate of our nation is on the line. Fellas, what are we using? Ladies, you can also chime in and tell the fellas what they should be using. Fellas. We're going to put bar soap, body wash. Yo, is y'all out here using body wash? Is this what we doing? Bro, we using bar soap, bro. We're using bar soap all day, every day. I don't know what Bryson talking about. You know, the fact that Bryson, Mr. Homophobic of all people, uses body wash it's alarming. It's quite alarming. It's absolutely alarming that he's using liquid gel to wash his body. Pause. You just squirting that stuff in your washcloth. Pause. Come on, Bryson. Bryson, we got to get switched to bar soap, man. We got to get Bryson to switch to bar soap. This cannot be allowed. Robert Jones said both. No, it's not both. I got 71% in the chat says they use a bar soap. Big Ron B say he uses dial bar soap. Hotep Goldstein says bar soap. Somebody said be careful, you might drop the soap. Well, I got bad news for you. If you're worried about dropping the soap, what are you doing in the shower with another man?
Hotep, you're a genius. HotepJesus.com.
Should not be another man in the shower with you. You've already violated. And if there's another man in the shower with you, you're either doing sports or you're in jail. This is not for the everyday man. Absolutely insane. Men are using body wash. This is despicable. This is deplorable. This is unheard of in foreign nations. What kind of first world shenanigans is this? Anyway, I just wanted to make sure we discuss that because this is important. You know, we want to make sure we guide the youth on how to live these days. Uncle Hotep has led us to believe that Dunkin Donuts is the way to go. Pumpkin spice. Let's take a look at what this guy has to say about Uncle Hotep's pumpkin spice lattes and such from Dunkin Donuts.
My friends, this is a pumpkin swirl frozen coffee.
Hold on. First, for context, let's go to Uncle Hotep's channel. For context, let's go to Uncle Hotep's channel. Keep in mind the hearing has not started yet. It's absolutely egregious. Unacceptable. Unacceptable behavior by our government. Here he is. Uncle Hotep, here's his channel. Let's find his Dunkin Donuts post. Just want to show you how this guy, look, best coffee in America bar none. You see it here on your screen, right? Let's go back.
Who the thought it was a good idea to put this on the menu, because this drink has 185 grams of sugar in here. How much is it? It's this much. It's 46 teaspoons of sugar. To give you another perspective, the amount of sugar in there is equal to 14 glazed donuts. Plus, there's no pumpkin in here. It's artificial flavors.
Oh, artificial flavors, no pumpkin in there, huh, Uncle Hotep? Big surprise.
12 mentions of sugar and high fructose corn. There's 930 calories and 194 carbs. 2/3 of us are already type 2 diabetic or pre-diabetic. If America runs on this, we're
And now we know why Uncle Hotep's kettlebell workout isn't working.
Hotep, you're a genius. HotepJesus.com.
Terrible. What are we going to do with Uncle Hotep, y'all? What are we going to do? We need an intervention. An intervention is imperative. Imperative. Diabetes in a cup, says Wilmar. Yeah. Ishmael said, Unc taking too many L's. This is Uncle Clone Tep. He got cloned. We don't know where the real Uncle Hotep is. If we can find the real Uncle Hotep, please stand up. What's the beef with body wash? Body wash is just too feminine, bro. It's just way too feminine. You got to get you a bar. Said low blow H-Day? No, I'm just calling it how it is, man. He leading the people wrong. We got to stop. We got to stop this. Children are watching. Children are watching. How come we don't have 1 million people in here? There's only 66 people on Rumble, only 105 on YouTube. You guys don't want to see a nice, boring House committee talk about the digital dollar? What's wrong with people? You should, you know, be clawing to get in here. All right, what else we got in here? So this dude, Oliver Anthony, you know, Mr. And we still got to post what's the name's video. I need him to send me a copy so I can post it. Actually, I could probably just download it somehow. Anyway, and this is a perfect time to strike on this story too. Can somebody send me Jack Reeves, the Legends music video with his remix so we can capitalize on this grifty moment? Anyway, Oliver Anthony took to Twitter and he said this.
I had to pull off on the side of the road and make this video. My adrenaline's pumping, man. I'm pissed off right now. And don't buy Cotton Eye Joe tickets for $99 a piece. And sure as hell don't buy VIP passes for whatever bullshit price they're on. I have a buddy of mine who's not a booking agent. He's a friend of mine. He's a full-time plumber.
All right, so we got two inexperienced people here running a business. Let's continue.
And I'm trying to hire him full-time as my booking agent. And he agreed to this show, I guess, without asking for what the ticket prices are. Don't pay $100 for a ticket. That's horseshit. If we've got to cancel the venue and play somewhere else, we will. I didn't agree to it, and I don't want you to pay it. So please don't. I'm just trying to get the word out now. I don't know when the event got posted, but just I had to.
So when I first saw this, I didn't think much of it. You know, I was like, whatever. I'll wait and see what happens, what comes of this. And Cernovich says maybe his heart is in the right place, but he's going to learn. We hold cigar night close to cost, you know, blah, blah, blah. So he's talking about the economics of running an event. And then we get this message here from the venue. And it reads as so. It says, it's a damn shame what the world's gotten to for the customers of world famous Cotton Joe. Most times we say a show has been canceled due to circumstances beyond our control. Well, we are canceling the Oliver Anthony show under our full control. All refunds will be made in the next few business days to your original form of payment. So basically what they're saying here is that he charged $120,000 for 60 minutes. After doing the math, we know that the venue holds 1,500 people. And we got to pay the website that's selling tickets. We got to pay Uncle Sam. And so they set the ticket price to a price that would cause them to break even. This is something we do sort of at HotepCon too. We really
Like when people say, "Oh, the tickets are expensive," I'm like, we put these like at cost. Like there's barely any money being made, and I've gotten cussed out by my handlers for not charging more for Hotep con tickets, and I'm just like, I just want people to come hang out with us. I don't really want to make it a money-making thing. I know I'm an idiot for that, and I should be rich if I thought differently, but it just is what it is. That's just how I feel. So apparently Oliver Anthony is not a businessman, and this is, and Cernovich says this is typical amongst creatives. Well, he doesn't say that. Somebody else in the chat says this, and it's true. Usually creatives have no idea how to do business, and business suffers because they're just inexperienced and don't know how things go. I think Oliver should have spoken to the venue first before running to Twitter, but for this, he definitely deserves to be canceled. What is this thing here from Scott Adams? And I'm joking when I say he deserves to be canceled. Obviously, he doesn't deserve to be canceled. And the House subcommittee is 12 minutes late on their CBDC discussion. Great. Good job, America. You are running on, what is it? What is it called? Time sensitivity or some shit like that. I think that's what they're calling it now. Time sensitivity. I don't know. Anyway, let's go to this tweet here. This is Donald Trump speaking to Megyn Kelly. Shout out to Megyn Kelly. I was on her show a couple of weeks back. If you guys haven't watched that, strongly suggest you go watch it. Really, really good discussion. Kind of shocking. I talked about Hillary Clinton, and Megyn provides some pushback because she wasn't familiar with the information that I released to her. But hey, it is what it is. Need to get Unc hooked on hunting and eating fresh meat. I'll never go back to store crap. Okay. I'd legit like to see a breakdown of how it costs $120K to run the place for a day. Well, it depends on venue cost. And I don't know. Oh, here we go. Here we go.
Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I want to thank our witnesses, our excellent panel today for being here. I now recognize myself for 4 minutes to give an opening statement. Today's hearing is entitled Digital Dollar Dilemma: The Implications of a Central Bank Digital Currency and Private Sector Alternatives. We're here to better understand what central bank digital currencies are and the concept of digital money, to compare CBDCs to privately issued payment stablecoins, and how design choices would impact areas like consumer privacy, banks of all sizes, and monetary policy. I'd like for members to hear from our witnesses today, not only about communist China's proposed digital yuan, but what steps the United Kingdom and the European Union have taken and why. So far, the conversation is focused on the Federal Reserve's legal authority to issue a CBDC. Look, the Constitution is clear. Only Congress has the authority to coin money and regulate the value of such money. And we've heard the same from Fed officials right before this committee, and most recently from Vice Chair for Supervision, Michael Barr, who last week told an audience in Philadelphia, and I quote, "The Federal Reserve would only proceed with the issuance of a CBDC with clear support from the executive branch and authorizing legislation from Congress."
Yeah, we went over that last week.
The Biden Department of Justice agrees, saying, quote, "There would be substantial legal risk to issuing a CBDC without such legislation." So let me be unequivocally clear here for this audience. There is no support for a CBDC in Congress except from those on the fringes who think somehow a CBDC might be an amazing solution to many unstated global problems. Several members, Mr. Emmer, Mr. Mooney, Mr. Auchincloss, and I have introduced bills stating that the Federal Reserve does not have the authority to issue a U.S. CBDC.
Retail CBDC.
I particularly want to say thank you to Mr. Auchincloss, Mr. Torres, and Mr. Nickel for their work on our bill and demonstrating that this isn't a controversial or partisan point of view. Let me be clear. While a retail Federal Reserve issued CBDC is not in the cards, there are many significant areas for improvement in our U.S. payment system. We need less complaining and more facts and progress. payments can be modernized by modifying the existing system infrastructure through innovations led by the private sector. Some modifications have yet to be implemented, like expanding the days and hours of the Fed wholesale payment services like the National Settlement Service or FedWire. These developments would provide for instant payments for individuals and businesses through their financial institution. It's not okay that the Fed still hasn't finished this work even a decade later with no clear timetable for its completion. However, other improvements are already underway. The RTP network has been around since 2017, while the FedNow service was recently launched in July. Turning to innovations in blockchain payment rails, our committee marked up Clarity for Payment Stablecoin Act in our committee during July, which establishes a federal regime for payment stablecoins with strict reserve and capital requirements, disclosures, and attestations to protect consumers. I want this hearing to explore whether a U.S. CBDC is the most efficient and effective means to address payment inefficiencies, or if in fact private sector alternatives and improvements to our existing payment system and infrastructure can better provide more immediate solutions. I look forward to hearing our witnesses' perspectives. I thank all my colleagues on both sides of the aisle for their dedication to thoughtfully explore this issue. Working together, we can modernize the U.S. payment system. The chair now recognizes the ranking member for the Subcommittee on Digital Assets, Financial Technology, and Inclusion, the gentleman from Massachusetts, Mr. Lynch, for 4 minutes for an opening statement.
Thank you, Mr. Chairman, for holding this hearing on such an important topic. As the former chair of the Task Force on Financial Technology, I held a handful of hearings on central bank digital currencies during my tenure. We heard from experts who discussed the potential ways in which a government-issued digital dollar could be designed to promote financial inclusion and protect privacy while streamlining our payment system and preventing fraud. I'm eager to continue these discussions, if that is allowed, and I hope that we can do so in a productive way. I worry about some of the recent false narratives and fear-mongering, much of which has been fueled by the crypto industry itself.
What?
That fear-mongering around a CBDC being weaponized as a tool for government surveillance or control. It's important to correct some of the inaccurate and misleading claims that could lead us to shut down innovative policy approaches before we have even begun a meaningful discussion. A CBDC is just one type of publicly issued digital dollar and would be issued, backed, and regulated by the Federal Reserve and have the full faith and backing of the U.S. government.
It's in there, why?
This could serve as an alternative to existing forms of payments and have a benefit including instant payment settlement, provide a medium for cross-border transactions, and foster greater financial inclusion. More than 130 countries have begun to explore their own government-backed digital currencies. China, Russia, Saudi Arabia, and India have already commenced pilot programs, and a digital euro pilot could be launched as early as 2028. Meanwhile, the U.S. remains far behind amid increasing and blatant information about features of digital currency. While concerns about data privacy and government surveillance are real, especially in countries that do not respect human rights and privacy, a CBDC does not have to be designed that way. We could employ an architecture that would protect personal data while including anti-money laundering and terrorist financing features. It is counterintuitive that my colleagues should be raising concerns about data privacy while thousands of private companies, domestic and foreign, are surveilling, aggregating, and selling consumer data each and every day. As policymakers, we should be asking questions about how a digital dollar could be designed to maximize privacy and prevent exploitation of personal data. To dive further today, I'm announcing and inviting my colleagues to join the Congressional Digital Dollar Caucus. This forum will educate members on critical issues relating to the development, design, and potential implementation of a government-issued digital dollar. I plan to invite innovators, technologists, academics, and other experts to share their findings and development. I hope my colleagues will join me in this exploration. I should make it clear that I do share the concerns with some of my colleagues about the need for digital currencies that respect privacy and anonymity. The use of anonymous cash has plummeted, and more of our transactions are occurring online and under surveillance, tracked and aggregated by financial services companies. Indeed, China has turned that fact into a tool of full-spectrum surveillance of its citizens. This is why I've introduced the eCash Act. This bill directs the Treasury to design and pilot a digital version of cash and would complement the Fed-issued CBDC. It would allow individuals to make instant peer-to-peer payments with no consumer data or transaction tracking and without the use of a bank account. This bill represents one of the many design choices of a digital dollar. In closing, I hope my colleagues will join me in this exploration rather than moving legislation that bans the Fed from issuing a CBDC or even goes so far as to prevent research or pilot programs. I call on my colleagues to thoughtfully engage on this topic and do not succumb to industry-driven narratives that prevent the U.S. from moving forward. Thank you, Mr. Chairman, and I yield back.
I thank the gentleman from Massachusetts, and now let me recognize the distinguished Majority Whip, Mr. Emmer from Minnesota, for 1 minute.
Chairman Hill, I want to thank you. This is an important hearing that you're holding today, and I appreciate it. Open, permissionless, and private. What do I mean by this? In our digital economy, all transactions are intermediated by banks, governments, or big tech. We must develop digital tools that function like cash. These digital assets must be open and freely accessible to all, without requiring permission from the government or anyone else, and private, safeguarding the user's identity. These qualities are fundamental to a free society, and unfortunately, the administrative state would rather have a cashless economy run on a central bank digital currency, a tool the communists have, than to work to maintain our American values in the digital age. The need to protect Americans' right to financial privacy is an all-time high. That's why I introduced the CBDC Anti-Surveillance State Act with over 50 of my colleagues. This bill prevents unelected bureaucrats from creating a tool for financial surveillance. If not open, permissionless, and private, like cash, a CBDC is nothing more than a CCP-style surveillance tool that will oppress the American way of life, and we're not going to allow that to happen. And Mr. Chair, I'd like to submit for the record my December 1st letter to the Susan Collins at the Federal Reserve Bank of Boston about their shady CBDC pilot they've been running.
Without objection, and the gentleman's time has expired. With that, we want to welcome the testimony of our panel. Dr. Norman Michel is the Vice President and Director of the Center for Monetary and Financial Alternatives at the Cato Institute.
Okay.
Ms. Paige Paradon is the Senior Vice President and Senior Associate General at the Bank Policy Institute. Mr. Yuval Ruiz is the co-founder and CEO of Digital Asset, an enterprise blockchain provider seeking to provide programmable smart contracts to traditional financial institutions. Professor Christina Skinner is an associate professor at the Wharton School at the University of Pennsylvania, where she focuses on central banks and fiscal authorities. And Mr. Raul Carrillo is an academic fellow and lecturer at the Columbia Law School, where he analyzes financial regulation, technology, and innovation. We thank each of you for taking time to be with us today. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made a part of the full record. And we're going to start with Dr. Michel. You're now recognized for 5 minutes.
Good afternoon, Chairman Hill, Ranking Member Lynch, members of the committee. Thank you for the opportunity today to testify. I'm Norbert Michel, Vice President Director, the Center for Monetary and Financial Alternatives at the Cato Institute. The views I express in this testimony are my own and should not be construed as representing any official position of the Cato Institute. In my testimony, I argue that the United States should not launch a central bank digital currency,
Let's go.
a CBDC.
Let's go.
Advocates for a CBDC tout many potential benefits, but there's nothing unique about the technology that would provide those supposed benefits. Frequently, advocates completely ignore private sector innovations as well as the potential risks a CBDC poses. Regardless of the possible design choices, such as whether a CBDC is direct or, as the Fed calls it, intermediated, these risks far outweigh any potential benefits because a CBDC is not, quote, just another form of money. A CBDC in any form would be a direct liability of the central government, a digital tether to its citizens, such that it would radically alter the existing public-private relationship that already exist in our monetary arrangement. There are many myths surrounding CBDCs, and I will use my time to discuss what I consider the three most important. First, issuing a CBDC would not help preserve the status of the United States dollar. It would likely damage it. Proponents argue that because China has launched a CBDC, the United States must keep up by launching its own. Others make the narrower claim that the U.S. must launch a CBDC to keep up with broader technological changes in the payment sector. But anyone who chooses to do so can transact digitally in U.S. dollars right now. A CBDC does not take us from a world with zero or few digital transactions to one filled with digital transactions. Moreover, the dollar's renowned status is owed to the strength of the American economy and its legal protections for private citizens relative to many other countries. Unlike in many other places, Americans do not have to live in constant fear that the government will take their money. However, if the U.S. creates a CBDC, anyone who wants to use the dollar would lose a layer of protection from that type of government abuse. The second myth is that a CBDC would expand financial inclusion by providing a new source of financial services for America's unbanked and underbanked populations. Again, though, this is not a technological problem. In other words, the CBDC itself does not accomplish this goal. The private sector already enables us to transact digitally, and it has been steadily shrinking the number of Americans without financial services for years. We also know, because the FDIC asked them, that unbanked and underbanked Americans primarily are in that situation because either they don't have enough money to have an account, or they don't want to give their personal information to a bank or the government. And what should be obvious is that a lack of sufficient income is a much broader economic problem than a CBDC or financial service technology. While some proponents argue that a CBDC lowers the cost of providing financial services, that's true only if the government subsidizes those costs or chooses to waive the same level of regulatory scrutiny it requires of private firms. And that level of scrutiny, it turns out, is more than just a costly mandate that the government has placed on private firms. It's also the one that causes those unbanked Americans to say they don't trust banks. It's also the same one that requires people to hand over their personal information to private companies and, as a result, potentially to the government. If the government removes that mandate for all financial service providers, there would be no cost advantage to a CBDC. That brings me to my last myth, the idea that a CBDC could somehow enhance financial privacy. Currently, Americans are forced to hand over personal information to financial institutions. Those institutions are required to track transactions, and the government can access that information without a warrant. The Fourth Amendment is supposed to protect Americans from the government gaining access to this kind of information unless they show probable cause and obtain a warrant. But it no longer protects Americans when it comes to financial information. And the only buffer left is that the government must go through the financial institution to obtain that information.
United States versus Miller.
Introducing a CBDC would remove this last layer of protection. It would place all financial transactions either in a government database or leave them a keystroke away. The United States should not launch a CBDC or provide direct wallets or accounts. Thank you for your consideration, and I'm happy to answer any questions that you may have.
Thank you, Dr. Michelle. Ms. Paradon, you're now recognized for 5 minutes to give your oral remarks.
We go.
Thank you. Chairman Hill, Ranking Member Lynch, and honorable members of the subcommittee, thank you for inviting me to testify. My name is Paige Paradon, and I am a Senior Vice President and Senior Associate General Counsel at the Bank Policy Institute, a nonpartisan policy, research, and advocacy organization representing banks with over $100 billion in U.S. assets. Technological innovation over the last several years has led to the increased speed
Hey,
of
dude behind her
payments,
need to go see
clearing,
Strong
and
Dad.
new
Strong Dad, you
forms
gotta
of
get him in
digital
shape,
money.
bro.
In part, due to concerns about this innovation, central banks have been studying and exploring the potential benefits of a central bank digital currency, CBDC, a form of digital money that is a direct liability of the central bank. Fortunately, the Federal Reserve Board has recognized that as both a legal and policy matter, Congress should decide whether the United States should have a central bank digital currency. On balance, we believe that at this point, there is little evidence that a CBDC would bring measurable benefits to the U.S. economy or consumers.
Okay.
Furthermore, a CBDC could upend the commercial banking system and create financial instability. A CBDC can take one of two general forms, a wholesale CBDC,
Or
which
retail.
would be used only by financial intermediaries, and a retail CBDC, which could be used by consumers and businesses. To date, most research and attention has been focused on a retail intermediated account-based model in which consumers' CBDCs would be held in an account at a bank or another financial intermediary. Like an asset held in custody, the CBDC could not be used by the bank to make loans in the way that dollar deposits are used today. Any transfer of a dollar deposit from a bank to a CBDC is a dollar unavailable for lending to businesses or consumers. By attracting deposits away from banks, a CBDC likely would undermine the commercial banking system in the United States and severely constrict the availability and increase the cost of credit to the economy. Many of the purported benefits of a CBDC are uncertain and furthermore are achievable through alternative, less risky means. For example, some have argued that a CBDC is necessary to increase payments efficiency and foster financial inclusion. However, in the United States, banks have led numerous efforts to improve the speed and security of payments, reduce the cost of financial products and services, and advance financial inclusion. For example, in 2017, the Clearinghouse launched RTP, a real-time payments network, which currently reaches 65% of U.S. demand deposit accounts. Zelle is another example of bank-led innovation, a bank-owned peer-to-peer payment service through which transferred funds are available almost immediately. In addition, banks stand ready to meet the demand for a blockchain-based cash equivalent instrument within the safety of the regulatory perimeter, such as by issuing deposit tokens. With respect to financial inclusion, a review of the reasons why certain individuals are unbanked makes it clear that a CBDC would be unlikely to meaningfully increase financial inclusion. For example, FDIC data reveals that many respondents are unbanked because of privacy concerns. An intermediated CBDC is unlikely to mitigate those concerns, given that it would presumably come with the same know your customer requirements that currently apply to banks. Furthermore, to help foster inclusion, banks are expanding access to safe and affordable financial services, such as low-cost banking accounts, including through the Bank On National program, which has the goal of ensuring that everyone has access to a low-cost bank account. There are over 375 Bank On nationally certified accounts, representing over 60% of the domestic deposit market. Ultimately, because a CBDC could undermine the commercial banking system and threaten financial stability, and because the purported benefits of a CBDC can be achieved through less harmful means, we agree with the Federal Reserve that further steps toward developing a CBDC should only be taken if research points to benefits for households, businesses, and the economy overall that exceed the downside risks and indicates that CBDC is superior to alternative methods, and only with the support of the executive branch and with legislative authorization. Thank you again for the opportunity to testify.
Two of the experts so far
Thank
on
you
this
so much,
panel
and now we'll go to Mr.
are
Ruse.
against
You're now recognized
CBDCs.
for 5 minutes to give your oral presentation.
Let's see.
Thank you, Chairman Hill, Ranking Member Lynch, and other committee members. My name is Yuval Ruse. I'm the co-founder and CEO of Digital Asset. As this committee deliberates on how best to bring the dollar into a digital era, I'm here to make two requests. First, that Congress ensures that any digitally represented dollar, whether a stable coin or a CBDC, lives within our constitutional framework. Americans using any digitally represented dollar should have the assurance that their privacy rights are protected under the Fourth Amendment framework. And second, that Congress works closely with the private sector and leverages technology already built and proven to serve the rails for any digitally represented dollar. Any solution that ignores private sector innovation risks technological stagnation and will ultimately undermine our global competitiveness. I helped found Digital Asset in 2014, Digital Asset is at the forefront of modernizing the infrastructure of financial system with our privacy-focused blockchain technology. For 9 years, we have worked hard to carefully and responsibly innovate to solve real problems in financial services. Today, our clients are using our privacy-focused DAML application platform and Canton blockchain protocol to reduce the time to issue bonds, stocks, and other financial instruments from days to seconds, ultimately reducing the settlement risk and increasing efficiency. One client is using our technology to process over $1 trillion of tokenized repo agreements per month. And our technology was recently used in a pilot project with the New York Federal Reserve's Innovation Center to demonstrate how blockchain technology can modernize the infrastructure for global dollar-based settlements. Importantly, this pilot project tested a shared ledger within the existing two-tier banking system to more efficiently record the movements of Federal Reserve money that occurs between banks on a daily basis. We recently announced, along with 29 market participants, the launch of the Canton Network to help connect institutions and move value globally. Our success is in no small part due to the fact that our technology is built with privacy at its core, making our technology well-suited for financial services. I'm here today because as we embark upon a new digital era in finance, I believe the global financial competitiveness of the United States, including the dollar's position as the world reserve currency, is at stake. This is a critical national security issue that demands innovation led by the private sector. But private sector innovation alone is not sufficient. As we've seen with the invention of the internet, without a proper policy framework and absent a strong partnership between the public and private sector initiatives may displace activities properly considered public goods, specifically money, that are due the protection offered by our Constitution. We expect our financial transactions to be afforded the privacy protections of the Fourth Amendment, and this should not change as payments become more digital. History has shown that technology is inseparable from finance, and today we stand at yet another technological inflection point for financial system, blockchain technology. As our successful client deployments demonstrate, blockchain technology, when built around configurable privacy, can provide the financial system with increased efficiency and reduced risk. It eliminates the need for maintaining multiple copies of the same information and allow value to be represented digitally. Leveraging blockchain technology to modernize financial infrastructure is critical to ensuring our continued global financial competitiveness and the dollar's status as the world's reserve currency. It is the rails on which digital value will be transferred. Of course, innovation alone is not sufficient for the United States to maintain its global competitiveness. But our role today as a global financial leader, with the dollar as the world's reserve currency, does require innovation. There is nothing inherent or inevitable about the inefficiencies in today's financial system. As other countries' financial systems eliminate these inefficiencies through blockchain technology, the United States risks being left behind and losing our leadership position. A global economic order aligned with our values is in our national interest. We have two critical advantages that can help us maintain our leadership position: vibrant private sector innovation and the rule of law enshrined in our Constitution and protected by its system of checks and balances. And our advantages are strongest when wielded together. While private sector innovation is important and is the engine that drives our economy, in an area as critical as finance, innovation needs to occur within a deliberate policy framework to ensure that innovation does not outrun or undermine our values and national interest. Thank you.
Thank you, Mr. Roos. Now
So
we'll
it seems
turn
like
to
he's
Professor Skinner.
pro-CBDC.
You're recognized for 5 minutes for your oral presentation.
Thank you, Subcommittee Chair Hill, Ranking Member Lynch, members of the subcommittee. Thank you again for the opportunity to testify on this important issue of CBDC in the United States. Although a CBDC remains hypothetical today, assessing the costs and benefits of CBDC is crucial to your ability to establish the appropriate lane markers for the Federal Reserve when it comes to money and payments. After all, Article 1 of the U.S. Constitution gives Congress the exclusive power to decide what money is. And although it's constitutionally permissible for Congress to delegate some monetary authority in certain respects, it's important that Congress not abdicate that authority by ceding too much discretion to pilot or develop a CBDC. So in my remarks today, I'd like to highlight 3 predictive points that I elaborate in further detail in my written testimony.
I like her so
First,
far.
introducing CBDC would change the people's relationship with the state, and by that I mean the government. Second, a CBDC would certainly change the relationship with the central bank. It could empower the central bank while at the same time weakening its independence. And third, even though CBDC is highly popular among many of the world's leading central banks, there is no discernible reason for the United States to move toward a CBDC right now. So privacy rights are the clearest place to start. Today, individuals can enjoy comprehensive privacy in their payments transactions by using cash. Now, although most central banks have suggested that CBDC is not going to replace cash, that near-term promise can't be guaranteed over the longer term. And the insinuation that CBDC is necessary or inevitable seems motivated by a view that cash will eventually become obsolete.
Go
But
off.
because central banks don't have the technology presently to offer cash-like privacy, a digital currency, unless it's radically redesigned, will bring with it the ability for the state to monitor or surveil its citizens' payments activity. So to turn to my second point, I'd like to focus on the impact of a CBDC on the Federal Reserve. Certainly, since 2010, the power and authority of the Fed has grown considerably, and Congress's responsibility to oversee the Fed requires it to understand how a CBDC could further empower the central bank, but also how it might weaken it. On the one hand, CBDC could result in a larger central bank balance sheet. Issuing CBDC would increase the liability side of the Fed's balance sheet if the total of bank reserves, repos, and cash balances largely remained unchanged. So if the liabilities with CBDC increase, so too must the Fed's assets. The Fed could buy more Treasury securities to match CBDC, but that could possibly invite pressure on the Fed to issue more CBDCs to in turn absorb more government debt. And overall, that dynamic could further erode the limited fiscal discipline that we have remaining. A CBDC could also affect the Fed's independence in the way that it would establish a direct relationship between the central bank and the real economy for the first time in history. One result of that relationship would almost certainly be the further erosion of the line between monetary and fiscal policy. Once central banks begin to issue liabilities directly to the people, it'll become much more difficult for the central bank to justify the provision of liquidity to banks and the financial system as opposed to households, especially during a crisis. And effectively, this could open the door to political pressure on the Fed to provide liquidity assistance to households during turbulent economic times. But these sorts of household-level interventions would radically transform the central bank and its purpose and role within society. For my third and final point, I'd like to briefly address the international dynamic that's currently in play. Leading central banks around the world, including the European Union, the European Central Bank, and the Bank of England, have much more strongly indicated their desire and intention to move toward a CBDC than the Federal Reserve has. But there's really no need to hurry for fear of missing out. It's important to recognize in this context that sometimes the emperor might not be wearing any clothes. The dollar that's used by households and businesses domestically and internationally is already digital. In fact, one is hard-pressed to find a compelling problem that CBDC solves. It does not inherently improve financial inclusion unless it's paired with accounts for all citizens, which the central bank itself has already recognized as infeasible. Nor does CBDC increase financial stability, given the extent to which we can expect it to disintermediate the banking sector. And while CBDC might expand the monetary policy toolkit, using remuneration on CBDC as a monetary policy instrument would invite the central bank to make socially contentious judgments. Finally, in closing, I'd like to add my voice to the chorus of those who have emphasized that the dollar's reserve currency status, undoubtedly a tremendous asset in the United States, does not turn on whether it's a CBDC. Our best approach is to preserve the global status of the dollar through our commitment to the rule of law, democratic institutions, and free market principles of innovation and well-tailored regulation.
She ain't perfect,
Thank you,
but
Professor.
she's on point.
Mr. Carrillo, you are recognized
I like
for
her.
5 minutes for your oral presentation. I might check your mic, sir.
Good afternoon, Chair Hill, Ranking Member Lynch, Committee Ranking Member Waters, distinguished members of the subcommittee. Thank you for inviting me to testify. My scholarship focuses on financial technology, especially digital privacy and sound data governance. My research also draws on my experience as a regulator, a legal services attorney, and a policy counsel. It also draws on my experience in my upbringing in the US-Mexico borderlands, a region under constant surveillance by government in partnership with Silicon Valley. Today, I support the call for a digital dollar system, including CBDC, Fed accounts, and eCash. I strongly believe that we can actually build a digital dollar system that respects our civil rights and freedoms and is safe for everyone to use. To frame our conversation more constructively, I will focus on two critical, faulty assumptions that dominate digital dollar discourse, including this hearing today. These faulty assumptions limit our collective capacity for innovation. The first faulty assumption is a matter of design. When we narrow the digital dollar to CBDC and the conversation to the Fed, we do a disservice to the public. This is incredibly unhelpful, especially when we discuss the digital dollar at the retail level. At a minimum, our conversation should include a discussion of the Treasury and its many bureaus, including the Mint, Bureau of Engraving and Printing, Bureau of Fiscal Service, and the Secret Service, who are involved in the deployment of financial technology every day. Second, when discussing privacy, the digital dollar system and CBDC should be compared to the existing systems that we are already using. As has been pointed out, the private sector does not protect data security or data privacy sufficiently. Crude opposition to CBDC based on surveillance grounds with no comparison to a real baseline is blinkered and leads us to throw the baby out with the bathwater. Just 6 years ago, last Thursday, Equifax revealed it had been breached, granting hackers access to the personal sensitive information of nearly every adult in the United States, including those without credit scores.
Oh, that's an argument.
The fintech world of more sophisticated data brokers and super apps engages in data maximization as a business model and embraces unnecessary complexity that undermines data security. Of course, the Fed is also engaged in its data-intensive financial surveillance, often in partnership with big tech and fintech. That part has been left out of our conversation today. Here, the precise problem is that the doctrine and technological platforms that the government uses evade data collection constraints by acquiring data from private sector entities that are not ceasing to collect that data, whether their ledgers are centralized or decentralized. The major financial surveillance threat in the United States is not in the public or private sector per se, but in both, and more importantly, in the links between them. The digital dollar system presents a unique opportunity, I think, to actually build financial privacy and security in this country through public infrastructure that would benefit everyone. But the digital dollar system will not do so if we build it like the Chinese system, and it will not do so if we allow third-party access to retail payments data beyond what is necessary to effectuate payments, as the private sector does today. Indeed, the only way to evolve beyond the surveillance status quo is to establish a direct digital dollar interface with consumers where the Fourth Amendment and other protections may actually apply.
He said it.
If we truly care about privacy, we should treat the banking and blockchain industry appeals to partnership as suspect based on legal and technological grounds alone. We can build a retail CBDC and Fed account system with superior protections compared to what exists now, and superior protections to the systems that are being built around the world currently. So today, I also advocate for the inclusion of digital cash, as detailed in the Electronic Cash and Hardware Security and Secured Hardware Act, the eCash Act, reintroduced by Representative Lynch today. eCash devices available on a smart card or a phone card would serve as digital counterparts to cold, hard American cash. These devices would not make payments over the internet. Instead, they would store Treasury-issued digital dollars on card hardware to enable everyday small dollar transactions for everyday people. These transactions would be subject to the BSA AML regime, and as a boon to law enforcement, we can set privacy-sensitive security controls and caps on transactions and usage. However, the cards would in no instance be capable of generating data that companies and agencies can abuse. We preserve a place for privacy within public infrastructure. The eCash Act harkens back to the past, to the days when President Lincoln established the banking and cash system that we still use today, and it also harkens to an exciting, inclusive, safe digital future. Thank you.
I thank the gentleman. Before we go to member questions, a note of housekeeping. This hearing will recess for the 3 p.m. vote series and immediately resume after votes. I now recognize myself for 5 minutes for questions. Appreciate the panel and the engagement and the good testimony today. And sometimes what's lost in this conversation about central bank digital currencies is that ultimately for this conversation, it's about a payments issue. If you look at countries around the world that have started piloting or launched their own CBDCs, it's loaded on people's mobile wallets and used to pay for things at a checkout counter. It's a big reason why some of us that oppose a US CBDC warn, for example, that an unchecked government could monitor your purchases at the gun store, flag you as a threat, cut you off your access to your bank accounts, even though you haven't done anything illegal. If you think Operation Choke Point was bad, let that sink in. Payment and transaction data can tell you a lot about somebody. That's why CFPB's Rule 1033 about the scope of the rule and whether it should be extended to Reg E and Reg Z accounts or beyond is so important. So in terms of payments, I'd like to have a good discussion about how Congress should be thinking about CBDCs in a world where payment stablecoins already exist with a total market capitalization of between $100 and $200 billion, and they're already here, they're already functioning. They aren't really being used by retail holders to pay for things like Starbucks coffee, but if stablecoins are issued under a strong federal framework, like the one we envision in our Clarity for Payment Stablecoins Act, they certainly could be. So Mr. Roos, in your view, could a US CBDC and payment stablecoins coexist and be integrated and interoperable with one another, and should they?
Yeah.
Thank you, Chairman Hill, for the question. First of all, I do think that any technological solution that the U.S. would want to carry forward is possible. I think that, as I stated in my opening remarks, I think that when it comes to money, trust is a very big component, and therefore privacy is going to be a very critical component of it. I think that it's important to understand that our perspective is that the usage of blockchain technology is all about reducing reconciliation. And I think that it's important that the government, in order to have trust in its payment system, whether it's by the private sector or by the government, has our privacy protected. You stated that stablecoins exist today. That is true. And I do think that there are technologies that can even improve our trust in stablecoins. As we know today, there are companies out there that know how to look at public permissionless blockchains and harvest information. And therefore, I think that we should, as introduced by the bill around stablecoins, create a framework that helps the government also set the rules for stablecoins.
Thank you. Appreciate that. Mr. Michel, do you think that they obviate the need for one another? Do you think payment stablecoins should be interoperable with a CBDC, or do you think actually stablecoins obviate the need for a CBDC in this blockchain payment space?
The latter. They obviate the need for them. I do not believe any private company is going to be able to compete with the government, and that's a broader rule, and it applies here as well.
Yep, thank you. Ms. Peridot, your testimony, appreciate it very much. You talk about upending the banking system, which is something that doesn't get a lot of conversation on this topic, where these CBDCs would actually be a liability of the central bank and not of the banking system, and thereby taking out the source of funding for all of America's lending. Could you expand on that, please?
Sure. A CBDC, because it would be a direct liability of the central bank, it would be perceived as the ultimate safe asset. So from that perspective, particularly during times of economic stress, it could attract depositors to pull their money out of the banking system to flee or run to a CBDC if there was perceived concern about the banking system or the financial system overall. So every dollar that currently resides in a bank account can be deployed for useful purposes in the economy, primarily through lending. Every dollar that is pulled out and from the banking system and put into a CBDC is one less dollar that could be put to good economic use. And that is why we have a fundamental concern with a retail CBDC, given the flight to quality risks.
Thank you for that. I'd like, in the time remaining, Mr. Ruse and Professor Skinner, if you would write written answer to my question on your views of what other countries that are issuing a CBDC, what you see the features and technology or the pros and cons there. If you do that in writing for me, I'd appreciate it. It's now my pleasure to call on the ranking member of the full committee, the distinguished gentlewoman from Los Angeles, Mrs. Waters, for her questions. 5 minutes.
Thank you very much. I'd like to direct my question to Mr. Carrillo. 130 countries representing 98% of the global economy are now exploring digital versions of their currencies, including the United States. Almost half of these countries are in advanced development, pilot, or launch stages of their
Remember I told y'all this was going to be an argument from Congress? Everybody else is doing it, so we got to.
May shape the future global financial landscape. What would it mean for the United States if we instead chose to stay on the sidelines of this race?
Thank you very much for the question, Representative Waters.
And why would you
My
ask
opinion
him?
is that it is incumbent upon the United States to provide leadership with respect to an inevitable process that is going to occur across the world. It is clear that we're all moving to digital fiat currency. The question is what sort of protections are going to attend digital fiat currency. If we don't get this right now, the rest of the world is going to move on, likely with systems in some places that are less protective of privacy and data security than our own. I think that the rhetoric around an arms race has been particularly unhelpful. In fact, there is opportunity for collaboration here, not with the totalitarian systems, but with folks who are building digital fiat currency, especially in developing areas where there is a need for offline access. What we learn from those countries could be particularly helpful with respect to our own development in communities of color and maintaining privacy, security, and civil rights. So again, I think it is the United States' job as reserve currency leader to lead the way here with respect to civil rights and our freedoms. Thank you.
Civil rights and our freedoms. People of color. I told you they was going to use that argument. I
there
knew
are
it.
differences of opinion, on this committee about whether or not we move in that direction. In addition to what you have just shared with us about what is happening around the world and with other countries, is there anything else that you can add to it that would show us at an advantage if, in fact, we moved to develop the CBDCs?
Yes, absolutely, Representative Waters. Thank you. And I'm happy to provide detailed written answers to these on this topic as well. But I'll highlight for now something that has been, I think, a common thread throughout the testimonies of myself and my fellow witnesses here, which is that this is a space where the future of money is being defined in part by competition. I believe I just heard that CBDCs would obviate the necessity of stablecoins. In my opinion, given the volatility and the recent collapses in the cryptocurrency industry, perhaps regulating the stablecoins better with a little competition is quite a good thing. Beyond that, I would say that I hear a lot of concern across the political spectrum in this committee about the power of Silicon Valley. And if you do not create an alternative to the corporate systems that collect data or promise to protect it and then collect it en masse, which is even worse and common in the blockchain industry, and what is going to happen is that Silicon Valley is going to win. And frankly, I don't think anybody here wants that. But in order to preserve the space that we have for public money and not make it a big tech enterprise, we in fact have to move forward with digital fiat currency.
Thank you very much. I yield back.
Thank you, Mrs. Waters. The gentleman from Ohio, the Vice Chairman of the Digital Asset Subcommittee and the Chairman of the Housing and Insurance Committee, Mr. Davidson, is recognized for 5 minutes.
I thank the chairman, frankly, for having this meeting. I think perhaps the biggest existential threat to Western civilization is a wrongly structured system of money. Sound money serves as a store of value, a stable store of value, and an efficient means of exchange. One of the key characteristics of sound money is that it facilitates permissionless peer-to-peer transactions, like cash. Currently, of the 100+ countries developing a central bank digital currency, none of them are developing a permissionless system. Every one of them is developing a permissioned system, including the United States Federal Reserve. So when we talk about permissions, we can kind of get something from that from the Federal Reserve's own report of that. They said in their report that it should be privacy protected, intermediated,
yes,
widely transferable, and identity verified. Mr. Michel, Dr. Skinner, Professor Skinner, in your view, is it possible to be both privacy protected and identity verified?
No, in my view, it's not. Once the information is in the system, in a system, it's in a system, and somebody's going to get it, and it's going to get out. I just quickly really want to say, I'm very happy to hear everybody here on the panel is pro Fourth Amendment. The problem, of course, as you know, is that the Bank Secrecy Act and the anti-money laundering regime runs right over the Fourth Amendment.
Let's go.
So
that's what needs to be fixed.
It's already a problem in third-party hands, but this wouldn't even be in third-party hands. But, Professor Skinner, what's your view?
My view is no, that's not possible right now, and central banks have essentially admitted as much. And to the extent such technology is or could be under development, it's extremely immature. And I think the point to emphasize here is that inherently there will be a trade-off to the extent central banks create CBDC between identity verification and privacy. And more than likely, central banks will always choose identity verification because they will never feel comfortable sacrificing the national security goals that they see as accompanying robust identity verification.
Yeah, I don't think they can conceive of a different architecture. So fundamentally, I think a lot of people don't understand the difference between Bitcoin, for example, maybe the most widely known digital asset, and a central bank digital currency. Bitcoin is permissionless, peer-to-peer. The whole computing architecture is different. If you add zero-knowledge proofs to that, that's a different thing, but it is not identity verified. It's also not intermediated in the same way. So, Mr. Roos, what's your take on this?
I think that introducing requirements that requires identification and then privacy do introduce challenges. I think that you mentioned, or it was mentioned, the Bank Secrecy Act. At the end of the day, those type of acts create the same similar conflicts. I think technology is capable of introducing digital money that has full privacy, but I think that has to be developed with a very clear policy that allows for public-private permissionless money.
Yeah, in fact, digital money that is private is available today. It's just not sponsored by a government anywhere. And governments generally, they want to know what you do, they want to know what you think, and as someone famously said recently, I wish I could just wake up and it not be true, but it is. And unfortunately, when you look at the money, it is being undermined. I think you've highlighted some other ways that it is, but when you look at the power that's possible with a centrally managed, centrally controlled, intermediated central bank digital currency, China is perhaps the epitome of it. Now, they don't have a Bill of Rights, they don't have civil liberties there, but they do have humans. And when humans have access to power, they tend to do it. I've referred to a central bank digital currency for the Lord of the Rings fans as the one ring to rule them all. And in my view, we ought to cast it into the fire and destroy it. In fact, our office is working on a bill to actually criminalize designing, developing, building, establishing a central bank digital currency. And why is that necessary? It's because we can use appropriations with Treasury and federal agencies, but without ending the Fed, we can't truly influence the Fed. So safe to say it would be hard for me to be more opposed to this concept. I yield back.
The gentleman's time has expired, and I recognize the ranking member of the subcommittee, Mr. Lynch of Massachusetts, for 5 minutes.
Thank you, Mr. Chairman. First of all, I want to thank all of the witnesses for your willingness to help the committee with its work. This is complex issue, so we appreciate your input. Mr. Carrillo, if we see what the private sector has done, especially with fintech and with just retail conduct in general, their method of operation is to vacuum up as much personal data as they possibly can, and they aggregate it, they track people, and then they sell it. If we were to allow the private sector, and that's what the suggestion of some of this legislation is, to push the government away and put this into the control of the private sector, would that be the type of digital currency or digital dollar that we want to protect the privacy of the American people?
Thank you very much, Representative Lynch. This question allows me to first clarify a point regarding Fourth Amendment doctrine, which I believe has been mischaracterized on this panel. The third-party doctrine creates problems precisely because of the connection between the private and public sectors. So to suggest that it is just going to not apply to the public sector and will apply to the private sector is to fundamentally misunderstand constitutional doctrine. We could have a system wherein private companies work with public companies, and that still could lend itself to mass surveillance. So these conclusory statements about application of the Fourth Amendment are not particularly helpful here. The laws and technology of the models being suggested do not lend themselves to the application of the Fourth Amendment. So I would urge more robust conversation around actual privacy law in these conversations. Now, I do not believe that either leaving the private sector in charge of financial service data collection or including it in an intermediated fashion in the CBDC context is going to improve privacy necessarily, and indeed is very unlikely not to do so. Thank you.
Thank you. As the ranking member of the full committee mentioned, there are already 130 countries out there representing 98% of the global economy that have already begun to explore and discuss, the idea around a central bank digital currency. Now, many of them are democracies. I'm not sure any of them have, well, with the exception of a couple, have made final decisions on how to deploy this or what the architecture will be. But is there value in at least looking at it and examining it? If the rest of the world is going in that direction, even if we don't want to do that ourselves and deploy it ourselves, isn't there value in exploring it? And we do a lot of research through DARPA that is it's a government agency. It works well with the private sector, and we explore possibilities. Then Congress rightfully makes that decision whether or not to deploy it. But isn't there value in that whole process in trying to understand the architecture and the implications of a digital currency?
Absolutely, Representative Litch. Thank you. I believe that that is sufficient reason alone, certainly, to explore the digital dollar. That said, I do also agree with you that the approach needs to be deeper and more expansive. We do not dedicate resources appropriately and hardly at all in this country to public money research and development. So in an instance, in this time, right now, we will have to partner between institutions in the public and private sector to develop the technology. Now, that is different from allowing private sector entities access to retail payments data under a digital dollar system, but we need an all-hands-on-deck approach to the building of both CBDC and electronic cash. And now, here I would make a special note that there are lots of stakeholders who are not represented, certainly in this hearing today, but otherwise, in other contexts, they're not represented as well. That certainly includes communities impacted by law enforcement. But beyond that, we're talking about small businesses and retailers that are raked over the coals by Visa and MasterCard with fees every day. We are talking about a wide swath of people who deserve privacy.
Oh, shit.
Thank you. My time has expired. I yield.
Damn.
I thank the gentleman from Massachusetts, and now we turn to Mr. Rose of
Black
Tennessee
people getting
for
raked
5
over the
minutes.
coals by Visa and
Thank you, Chairman, and
MasterCard.
thank you to our witnesses for being here with us today. Dr. Michel, in recent years, we have seen many cases where the Fourth Amendment has been critical in protecting the rights of individuals. Cases like Carpenter versus the United States, which established that the government must obtain a warrant before obtaining cell phone location data, or Riley v. California, which held that the police must obtain a warrant before searching a suspect's cell phone. The law is developing in these areas to protect individuals' right to privacy, but it is still lagging behind in the financial sector. In particular, decisions in United States v. Miller and Maryland v. Smith gave us the third-party doctrine. Under that doctrine, if you voluntarily provide information to a third party, the Fourth Amendment does not preclude the government from accessing it without a warrant. Dr. Michel, can you explain how the third-party doctrine has impacted Americans' financial privacy?
Yes, they practically have none at the moment because of this, partly because of this. But I also want to clarify,
That's a
because
great
of something
setup
that was
question.
just said on the panel. The Fourth Amendment is, of course, that we're talking about is the one that amends the Constitution to the United States, which protects American citizens from the government. So, I mean, this is exactly the issue, and it was brought up in the cases in the 70s when the Bank Secrecy Act was challenged. If the Bank Secrecy Act were not there, the banks and financial institutions that we have would not be required by the government to collect the data that they are. That is a requirement in the Bank Secrecy Act.
Get a
And that
copy of
was
my book.
always, you can go back, everybody can go back and look at those cases. That was always an issue as to whether this was constitutional and in violation of possibly the Fourth Amendment.
Yes.
So between the combination of the Bank Secrecy Act, the Fourth Amendment issues, and the third-party doctrine, Americans, although many of them don't realize it, have very little financial privacy at the moment.
How would the adoption of a CBDC further erode Americans' reasonable expectation of financial privacy?
I believe it would remove the last layer that we have, quite simply. Instead of having to go through the financial institution, the government would have that information either in a central database or a keystroke away.
Dr. Michel, your organization recently released a survey that found that 68% of Americans would oppose a CBDC
What's that dude's
if
name?
it allowed the federal government to monitor their spending. Why would the government want to monitor the spending of its citizens?
There is no way to implement a CBDC and provide all the benefits that the advocates say, including monetary policy effects,
Dr.
without
Norbert?
doing that. That is the absolute key there.
The survey also found that 74% of Americans would oppose adopting a CBDC if it meant that the government could use the CBDC to control how people spend their money. Why would the federal government want to control what its citizens spend money on?
That's a great question. I mean, so aside from any political aspirations, that is the monetary policy piece of this.
Would they perhaps want us to stop purchasing guns or maybe gas-powered vehicles or gas stoves?
Politically, it is a nightmare for either side. It could be used to stop labor unions. It could be used to stop people from spending things on gas stoves. It could be used under any political guise as desired.
Stop them from traveling to a protest or expressing their First Amendment rights.
Which we've already seen in other countries without the CBDC. So I think this exacerbates all those political problems. That's exactly what this does, and that's exactly why we shouldn't have one.
What does the FDIC's annual survey among unbanked, Dr. Michel, again, among unbanked households tell us about the value that some Americans place on financial privacy?
It tells me that a lot of them do place a very high value on it, and one of the reasons that some people stay out of the banking system is precisely because of that issue.
Proponents of a CBDC also advocate for Fed accounts and postal banking, yet a 2021 postal banking pilot program that was given $6 million and had only 6 customers and generated less than $35 in revenue. Could you discuss why postal banking would be a bad idea for the U.S. economy?
Well, it's a bad idea for the same reasons that we've discussed with as general as Cbdc or a digital dollar backed by the U.S. government. And it also highlights that the private sector in the United States actually does do a good job of providing financial services in general, broadly speaking.
Thank you. I yield back.
I need him to debate man bun.
Now it's a pleasure to turn to the gentleman from Illinois, my friend Mr. Foster, for 5 minutes.
Come on, Foster, you on the clock, bro. Turn your mic on. Who are these people walking out? Sit your ass down. We got work to do, bro. Fate of the United States is on the line.
Try this one. All right.
Somebody get that man a mic.
Okay.
Reset the clock.
Oh, let's see. Now I've lost my cheat sheet here. Okay. First, just in the issue of sort of the foundational issue of privacy, how many of the witnesses feel that the current, Bank Secrecy Act, the KYC, AML, SARS, and although that it represents a violation of the Fourth Amendment and should not be a feature of future payment systems?
Let's
how many
go. Raise your hand. One.
The first witness.
So one person.
Indicated. Everyone else believes that for future payment systems, there should be some form of KYC, AML, and so on. The traceability of transactions. Okay, that's an interesting sort of branch point in this discussion.
Shit.
Because then the question is, how do you implement the best policy, the best privacy? Mr. Carrillo, you referred to a privacy preserving design for this. Is there a specific implementation of that's ever been carried out or even designed?
Yeah.
I presume this involves some sort of official government action to de-anonymize transactions or something like this? How does this, can you say a little more about how that might work?
Yes, thank you, Representative Foster. I appreciate the opportunity to provide more details and to clarify the vision of electronic cash, especially as it pertains to the eCash Act. We envision hardware devices, so those can be cards similar in size to an existing debit or credit card, or they can be secured SIM cards or something like it on a phone that would enable hardware-based transactions and for people to make payments as they do today with paper cash for everyday things without fear of government or corporate surveillance, which occurs in tandem when we use digital payments today. As for the security question, yes, the hardware will be encrypted, certainly, but there are security controls that can be enabled to implement AML KYC at the technological level. Currently, BSA AML treats different types of technology differently. They have each of their sub-legal regimes, and so the regime that applies to cash and currency would in fact apply to the eCash.
Okay.
It could just use zero knowledge proofs.
Provides for
I
the
don't know if he
record
knows
some
about that.
documentation on how that actually might work. I've got a bunch of
The
technological
ZK technology.
questions,
Syscoin's got ZK
the
technology.
degree of trust you have to place in the hardware implementation of your eCash. If it's blockchain-based, double spending problem and operation offline.
I would be happy to do so, Representative Foster. I would clarify that the point of eCash is that it does not operate online. It is actually open, permissionless, and private in the sense that you don't need a blockchain or a banking intermediary. Moreover, I would point that I think it's incredibly important to engage with universities on this issue. They've been left out of the technology and industrial policy conversation that's occurred here today. Universities are a great site of research that we can get where there is not a pernicious, lucrative interest involved. Certainly universities gain from these partnerships, but they need to play a stronger role moving forward.
Like MIT?
Maybe I'll poke again at the privacy question with a specific example. Let's say someone puts a gun to your head, drags you into an alley, says, get out your phone, transfer all of your eCash or whatever to me, or your crypto assets to my phone or some other device they have. Then is it your view of the endpoint of privacy that we have a duty to preserve the privacy of that criminal or not? Or should there be a backdoor on figuring out who the heck owns the account or device that it was transferred into.
Thank you, Representative
Yeah, well, could I start with our second witness, Ms. Paradan?
Sure.
She don't know what she's talking
No, I
about.
think there should be a record of the
There should be
ability to
a
track.
traceable record so that you can, or for ransomware, for example, when someone says, I've encrypted your files,
That's
you
my
know,
personal view, yes.
that's your personal view?
Don't ask her no
Dr.
more
Michael?
questions.
Well, you don't have that for anybody who uses ransomware
So
now.
your
but
answer
you
is
still
that that's
find
okay.
them.
Yeah, your answer.
No, I think you should be able to have a private transaction without AML. That's absolutely correct. Yes.
Okay, so that you're in favor of the ransomware, basically, that we should not.
I did not say that, and I hope the record reflects that.
Okay, no, I understand, but
was clear.
the system that allows ransomware to exist is something that you're in favor of preserving.
No, ransomware exists whether the system allows it or not.
The
I like this
payment
guy.
system for ransomware
Does
has.
not allow
flourished.
ransomware to exist, sir.
Okay, well, Ginger, another, oops, I'm running out of time here, but I thank the chairman for having this.
He tried to gaslight
Dr.
dude.
Foster,
He tried to
thank you very
gaslight
much.
him.
We now turn to the gentleman from Wisconsin, Brian Stile, for 5 minutes.
Thank you very much, Mr. Chairman. Thank you for holding today's hearing. This is a really important topic. CBDC gives me significant concern as it relates to Americans' privacy. We've seen our privacy invaded in a number of ways. I think a federal government CBDC would be a worse situation. In particular, I don't think the Federal Reserve has the authority to do a CBDC. I think that's important to note. I don't think Congress should give the Federal Reserve authority to do the CBDC.
Boomer tech.
And the reason is based on
Yeah,
the federal
Kumar.
government having access into that level of information about American citizens. And I think some of the distinction from the previous question as it relates to the ability to track this is whether or not that information is in a depository of your federal government or if that's in records in the private business sector. And I think it's important that we pull this distinction apart.
Gotta delineate
if I
that.
can, let me shift gears slightly though, and come over as it relates to liquidity in the market. And Ms. Paradan, in your testimony, you wrote any transfer of a dollar deposit from a commercial bank or credit union to a CBDC is a dollar unavailable for lending to businesses or consumers. Can you expand a little bit on that
Yeah,
statement
please.
about how an
I didn't
adoption
understand that either.
of an intermediated CBDC impact, how would it impact credit and availability and the
She
cost of
can't
banking
answer that
services?
question.
Sure, happy to, thank you. So I think there's a misconception generally that a dollar transferred from a deposit account to a CBDC that CBDC would still be able to be used for lending and investment in the economy the way that dollar deposits currently are now. And that is not the case. A CBDC, even if intermediated, in other words, even if
There's a
the
banking
services, including onboarding and other services that commercial banks currently provide, even if those services were provided by banks with respect to a consumer's CBDC, the fact is the bank would really only hold that CBDC in the same manner it holds an asset in custody. So it would have to essentially keep that CBDC under the proverbial mattress, and it would not be able to be redeployed in the form of loans.
Okay.
So thank you very much. So let me build on this if I can. Mr.
That's a
Michel,
wholesale CBDC,
in
by the
particular,
way.
how that would impact monetary policy. If you take what Ms. Paradan just said.
Well, it would have a large impact in the sense that it would be very different from what we understand is that this would allow the government to put money directly into accounts as well as take it out. And nobody ever wants to talk about that one. When things are going, and ironically, when things are going bad and a recession's coming, that's when you would see the Fed want to go toward negative interest rates and everybody would stop and say, wait, what are we doing? And the only way to do that is to provide zero options for anybody to use any other payment method. So to get all of those benefits, you have to, at some point, make this the only option, not just another option.
Let me shift gears with you, Mr. Michel, because I know you didn't have enough time to respond to this on the privacy question. Does your privacy concerns have to do with the CBDC being government controlled rather than private sector controlled?
Yes, that's correct.
And so how does that play out? So as we think about maybe like China going forward with the CBDC, having none of the constitutional privacy rights of an American citizen, and if we think about that from the government standpoint versus an American private sector standpoint, how should policymakers think of that?
Well, I'm of the view that of the private sector, you have many different companies doing many different things, and if people decide that they're not doing something that they like, there is a remedy for that. There's always a remedy for that. Whereas if you have the government dictating what can and cannot be done, then that's the only one thing that can be done, which is why we have the Fourth Amendment in the first place.
I think that's a really important distinction here. The CBDC puts the power in the hands of the federal government rather than in the hands of the private sector.
Correct.
I think there's a major distinction between American capitalism and a government-centric approach that we'd also see in China. I thank the chairman for having today's hearing. I yield back.
Gentleman yields. The gentleman from Illinois, Mr. Caston, is recognized for 5 minutes.
Thank you, Mr. Hill, and thank you to the committee for having this hearing and for the couple years now we've spent on this issue. I want to focus on some pretty just high-level basic issues because I feel like we're having conversations about theory that are disconnected from facts.
Okay.
And I want to start, and I don't want to sound cutesy, but I just want to start with something real simple. Remember the scene in It's a Wonderful Life when George Bailey walks through, the money's not here, it's in your house, in your house. Were any of you confused by that scene? Okay, let me back up. As best as I can tell, about the 12th century, the Knights Templar essentially invented fractional banking. It was this fascinating history. It was part of the Crusades that you could put your money in a bank in London, and there was script that went through all the way to Jerusalem, and you could get through, and they were loaning against deposits.
Yep.
Does anybody find the basic principle of fractional banking confusing?
Uh-oh.
Okay, all of you are smarter than 90% of the world's crypto bros. Thank you. Because sometimes this conversation is maddening to me because it's predicated on the idea that like the value of money is just the amount of hard currency in circulation.
Yeah.
Now, I ask those questions and Ms. Paradine, I really appreciate
He's right.
your
Crypto
comment
bros don't
because
understand
I think
this
if I
shit.
understood your testimony, you said that CBDCs always have to be liabilities of the issuing central bank, correct?
Yeah.
That's how it's been defined, yes.
Okay. And by the way, Lael Brainerd testified to the same effect about a year ago here.
Mm-hmm.
That means that banks can't lend against deposits, which means, if I understand right, that a CBDC can only grow M1 money supply. Would you agree with that?
Well, a CBDC, if it was an intermediated CBDC, banks would essentially hold CBDC
As a reserve asset.
as a custodian. That's right. They wouldn't be able to lend out some portion of the CBDC as they
But
do
you could lend
deposits.
against it.
Yeah, so it essentially it upends what the Knights Templar came up with in the 12th century. It's only M1 money supply.
Correct.
Right? So isn't it also then true that to the degree that any central government, our central government, the Chinese central government, the Vietnamese, I don't care, any central government that increases the relative share of their M1 money supply, that is CBDCs as opposed to traditional currency, aren't they de facto shrinking the size of their economy because there's simply less money in circulation? Because as that ratio, if you had 100% CBDCs was all the M1 money supply, you'd have no lending, right? So doesn't any proportional increase in the amount of CBDC in an economy shrink the economy?
Well, there's different, there could be shifts to other forms of ways to fund lending. Banks could borrow in the wholesale markets. They could potentially borrow from the Federal Reserve. So I'm not necessarily sure it's a one-to-one relationship as you.
Well, but what I'm saying is like central banks are issuing currency into the economy, right?
Correct.
And all of the other forms of currency they introduce are leverageable.
Yes.
This is
yes.
We seem to be in agreement that
leverage it for
CBDCs
lending.
by definition are not leverageable.
A retail CBDC, that's right.
Okay, so I'm left like, why do we care? Like, we can talk about all the theory of all the things that, if I had a unicorn that could fly, I'd have a shorter commute to work. But if we can't make the case that this actually makes sense for modern banking, and by modern I mean banking as it has existed since the 12th century.
I told you that lady was an idiot.
And if our competitors, if the answer is, well, if we don't do it, the Chinese will, sounds to me like, have at it.
She ain't got no
We
response.
are not supportive of a retail CBDC, so I would tend to agree with you. And I think there are reasons that people believe a CBDC could be beneficial. to date, we don't think that there's necessarily evidence to support those benefits. For example, we don't believe it would increase financial inclusion. We don't believe it's necessary to increase the speed or efficiency of payments, but there are, those who do believe it has some purported benefits.
Well, I guess
He forced her to tell the truth.
We've been having these conversations for 2 years because there is a sex appeal to the digital currency space, and that's true for stablecoins. It's true for Bitcoin. And time will tell whether this is sexy in the way that the advent of the internet was sexy, or sexy in the way that Beanie Babies were sexy. But somebody has to make the case for this actually being useful as for currency, and not just for money laundering, and not just for speculative bubbles. Before I think we have something to worry about. I yield back. Thank you.
I thank the gentleman for yielding back, and now the gentleman from Nebraska, the home of the
I wanted him to do that to
flyover.
man
The
bun.
gentleman, Mr. Flood's recognized for 5 minutes.
Thank you, Mr. Chairman. The gentleman from Little Rock was a keynote at the FinTech flyover and much appreciated. Let me begin by making something evidently clear. I am firmly opposed to a retail CDBC.
Okay.
My opposition to a retail CBDC comes down to one simple concern at the heart of our republic, which is concentration of power in the hands of the federal government.
I love it.
The CBDC issued by the Federal Reserve would open the door to a few different troubling potential futures,
Name 'em.
regardless of the intent of the original issuer. If we use a retail CBDC, the Federal Reserve would be at the center of every American transaction. It could be used to prevent certain types of disfavored purchases, block certain disfavored people from using our financial system, or monitor the payment activities of political opponents.
Educate them.
That's an enormous amount of power, and that power would put tremendous pressure on the Federal Reserve.
Yep.
My concern is that once we build a CBDC, we don't have it just today and tomorrow with our current set of regulators. A retail CBDC would be a serious threat to liberty, even if our current leaders were angels. Once rolled out, a CBDC would ensure well past the time of anyone in this room. It would endure well past the time of anyone in this room. It will continue to be influenced and changed by future leaders over the coming decades. Some proponents of this may point to concerns over practices regarding how some private companies collect consumer financial data. They may argue that it's better to put the payments process under the oversight of the government directly than have private actors in charge. Such an argument doesn't fully contemplate the extent of the possible abuse that could come from regulators or political actors if given this tool, and that's a point I'd like to dig into a bit more in my questions.
Let's
Ms.
get to
Skinner, in your testimony, you mentioned how a CBDC could lead the Federal Reserve's to the Federal Reserve's independence being threatened. Can you speak more on that?
Yes, certainly. Thank you for the question. So in the first instance, to the extent the Federal Reserve doesn't change the composition of its balance sheet otherwise, issuing a CBDC will increase its liabilities, which means that it has to match that increase in liabilities by purchasing more assets. So the first thing that we would think about when the Fed would purchase more assets would be buying more Treasury securities. That being said, with the potential for the Fed to issue more CBDC, thereby giving it more headroom to buy more Treasury securities, would be likely to put some pressure on the Fed at some point down the line from the Treasury to issue that CBDC to absorb more government debt, which we call monetary finance or monetizing the deficit. And before World War II, the Fed essentially operated under the thumb of the Treasury so that during wartime and otherwise, the Fed could effectively monetize the deficit. And really today, that's anathema to an independent central bank. There are other things that the Fed could also be pressured to buy to match an increase in CBDC, like corporate bonds. Now, our recent experimentation in corporate bonds has put some question around whether this too could politicize a central bank, because inevitably, if central banks buy corporate bonds, they're picking winners and losers in the economy. Now, the Fed has been pretty neutral in its approach, but there has been a lot of pressure on the central bank to, for example, buy green bonds in order to facilitate a transition to a low carbon economy. And certainly other central banks do actively green their corporate bond portfolios.
And I appreciate that, and you have a great answer there. I want to get to one more question with Dr. Michelle. Doctor, you spoke in your testimony about the potential for a CBDC to be programmed for specific purposes and even used to achieve monetary or fiscal policy goals. Can you elaborate on why that might be a potential problem?
Well, it's a potential problem in the sense that for these potential benefits to be recognized, you have to do it that way. It is a completely programmable device. If you are, for example, in the middle of a pandemic, you would be able to flood the market with money, and at some point you have to take that money out of the market. As soon as you're doing that as a central bank, you have to decide exactly who to give it to and exactly who to give it away or take it away from. That's a political nightmare. Frankly, I don't think the Fed wants anything to do with, and I'm positive most Americans don't want the government to have to make those decisions in that way.
Really appreciate that answer. And you know, I'm not one to engage in alarmism, but some of the things we've discussed today are serious possibilities that must be considered both within the context of today and the possibilities of how these risks could evolve in the future. With that, Mr. Chairman, I yield back.
I thank the gentleman. I'd like to inform our panel we are going to recess. We have a few more questions after we vote. There are 2 votes. This is the first one. There'll be one more, which will be shorter. Thank you for indulgence, and the committee stands in recess till after votes.
Wow, what a session. And we're not done. And they're not done. They are in recess. Got to do some voting. Wow. Wow. Ladies and gentlemen. Ladies and gentlemen. Oh, my mama. A lot just went down there. A lot just went down there. I don't even know what to do. Should I open up phone lines now while we in recess and discuss this? Y'all want to talk from the chat? Should I go back in the Grift bag? Let's see what the audience says. Let's see what the audience says. Grift bag, phone calls, talk to chat. Let's see. Let's see what the chat says. I'll let the chat decide what we should do here. I'd just like to note that, let me mute this. The hearing stream on YouTube has 245. I think it peaked at about maybe 260 or something like that. About 250 people watching that. 250 people watching one of the most important hearings of our lifetime. I'd just like to say that we have more people watching it with me.
Hotep, you're a genius. HotepJesus.com.
I'd also like to point out the fact that my book, The Patriot Report, Unmasking the Conspiracy of Money and War, has talked about the Fourth Amendment implications, which I've cited from other sources. This is not something that I discovered. I just did my research. And, yeah, the Bank Secrecy Act is, I think it's the Bank Secrecy Act of 1970, if I'm not mistaken. Let me take a look here. Let me see if I can find that. Yeah, I'm correct. Okay, so let's put this up on your screen. I'll hide this for now. See it right there. Bank Secrecy Act of 1970, issued by the IRS, I believe, is the issuing agency. And they said they did this. They said they did this to fight money laundering and other issues. But you see here reports of cash payments, 10,000 received in trade or business. So that's where that reporting came from, right? You guys are familiar with that $10,000 limit. Many of you are wondering where that came from, or haven't wondered, but now you know. Bank Secrecy Act of 1970. Bank Secrecy Act of 1970 is complicit in destroying the Fourth Amendment. Also in that hearing, they discussed United States versus Miller. Put that on your screen now. You guys will see that here. This is 1976. And it said that United States Supreme Court held that bank records are not subject to protection under the Fourth Amendment. So your bank records, according to the United States Supreme Court, United States versus Miller, 45 U.S. Code 434, 1976, stated that your bank records are not subject to protection under the Fourth Amendment. Yo, where's Chad at? Chad, what's the quote? either the United States Constitution failed to protect our liberties, or it designed to. How does it go again? Well, who's that quoting? Who was that? Was that Skinner? I think it was Skinner. Or was it somebody else? What is that quote? I know all my libertarians know that quote by heart. Where my libertarians at? Either the Constitution has. Let me see if I can find it using that. Spooner. I'm sorry, it was Spooner. I think it was Lysander Spooner who said this. All right, right here. So Spooner says, Lysander Spooner, he says, but whether the Constitution really be one thing or another, this much is certain, that it has either authorized such a government as we have had, or has been powerless to prevent it. In either case, it is unfit to exist. Now we're diving deep inside libertarian doctrine. Mises Caucus is familiar with a lot of this stuff. For conservatives, this stuff is probably alarming because, well, you're under the right-left paradigm. So you're basically indoctrinated either by the right or either by the left. If you're indoctrinated by the right, you're pretty much a victim of jingoism. And if you're under the left, you're basically a communist. But if you're calling things straight down the middle, as Mises Caucus, what's his name? I almost said Dave Smith. Dave Smith. If you follow Dave Smith, he has some great talks on this stuff as well. But this Lysander Spooner quote is prescient and ominous in saying that either the Constitution has either authorized the government we have or powerless to prevent it. So I know a lot of people out there like die-hard constitutionalists, right? And this is, I believe, a form of jingoism perpetuated by the right. But they're die-hard constitutionalists. And I'm not exactly sure what to think about the matter personally. I do know that the Constitution, in some ways, is helpful and in some ways is not. It has been helpful in the Supreme Court overturning Roe v. Wade, but when are they going to revisit United States versus Miller? When are they going to revisit? I mean, let's just stop right there. Like United States versus Miller, that's a huge problem where you have a right to privacy, but not your banking records. Is this the United States of America or is it China? Now, this is 1976. This is 1976. So obviously Americans have been asleep at the wheel for the past 40 plus years. Where are we going as a nation when this stuff can happen? And to some of you, this is new news. If you read my book, The Patriot Report, Unmasked the Conspiracy of Money and War. Let's see if we can find that now. Probably on a bunch of different websites at this point. Google Books. Google Books has listed my book here. You can see it on your screen right now. There we go. And then hold on, let me just show this to you. So there it is. There's my document, The Patriot Report, Conspiracy of Money and War, now available on Amazon and HotepJesus.com.
Hotep, you're a genius. HotepJesus.com.
Also, if you don't like reading, I have a full playlist on here called The Patriot Report. I suggest watching that and maybe getting a copy of the book just so you can follow along and see the pages. But all this stuff is direct from congressional record and Supreme Courts. But yeah, we dive into, this is not conspiracy theory. This is all conspiracy fact. Okay, it's all conspiracy fact. There's even a bit in here on Jekyll Island, which many of you are familiar with. So yeah, I'm gonna take a look at the chat really fast to see what the chat is saying now. Jay Wink said, once you are banking in the public sector, you have lost your ability to for privacy. How do we shore that up? Yeah. Who's this texting me? Oh, thank you, Kay. I appreciate you. Appreciate you, Kay. Skinner versus Oklahoma. Yeah, maybe that's in my brain, and that's why Skinner came up. Or I was thinking about something else. I'm not exactly sure. Skinner versus Oklahoma. What was that case? I don't remember that case. Of course, Jonah knows about Skinner. Jonah says Spooner destroyed the Rothschilds in Constitution of No Authority. Yeah, I got to read that. What's this? I got a link here from Goldstein. Oh, okay. Yeah, I saw that. Biden is talking about potential weather effects. And that's in the Grift bag. We'll probably get to that. Hotep Boulay, he said he sent a $20 super chat. Thank you for sharing your money with me. He says, thanks for the CBDC presentations, even when they are anti-grift. These things are anti-grift. It doesn't quite get the clicks, but it's important. And I think it's important to be a part of the right side of history so that when people look back, they know there was this guy named Hotep Jesus who did try his best to save the republic, as some jingos would. Anybody disagree? Anybody disagree here? Thank you, Montoya. She says, love that you're covering this. Thank you. He said, this hearing lost me at Maxine Waters' presence. Yeah, she's a part of the House Financials Committee, subcommittee. Renee Vogel said, thank you, HJ, for covering this today. Yeah, no doubt. No doubt. I had to. I mean, like I said, as I've been curating this Grift report, I've been trying to find a balance between small brain content and big brain content. Obviously, small brain content gets the clicks, but the big brain content needs to happen. People have criticized me in the past and said, Hotep Jesus, you know better. You have to put the medicine inside the candy. So that's what I attempt to do with the Grift report. The Grift report is putting the medicine inside the candy. So you will see the headline and the thumbnail will be something small brain. Then you get here, and then I've tricked you into becoming a smarter individual, which is a necessity. And really, it's just a matter of, it's really a selfish endeavor, I have to be honest with you, because it's just quite annoying for me to cover only small brain content when really my brain is more geared towards big brain content. I like to geek out. So I lean more towards the big brain content. Mostly because I can give you honest feedback on it. I can actually use my brain. Small brain content doesn't inspire me to talk about this shit, but like these topics like CBDC inspires me to do the research and read the different things. Fascinating about the hearing. Let's talk about the hearing really fast that we just witnessed there. What he talked about the M1 money supply, right? So let's go ahead and put that on your screen. Again, this is stuff like when he mentioned in the hearing that the crypto bros don't know how fractional reserve banking works, and it's true. I've run across a bunch of crypto bros, no idea how traditional banking works. They can trade their asses off. They can tell you a bunch of things about crypto. Many don't know about the crypto tech, but I believe the value in crypto is in the technology and not the crypto assets themselves. That's why I like Syscoin, because they focus heavily on the tech. But yeah, so it says right here, M1 consists of currency outside the U.S. Treasury, Federal Reserve banks, and the vaults of depository institutions. 2, demand deposits at commercial banks, excluding those amounts held by depository institutions, the United States government, and foreign banks, less cash items in the process, right? So let's go here. M1's money supply and how to calculate it, right? So M1 money supply is composed of currency, demand deposits, and other liquid deposits, which include saving deposits. So basically the people's money. M1 include the most liquid portions of money supply because it contains currency and assets that can either be quickly converted to cash. However, near money and near money, which fall under M2 and M3, cannot be converted into currency as quickly. So M1 here is a measure of money supply that includes currency, demand deposits, and other liquid deposits, including savings deposits. M1 does not include financial assets such as bonds. M1 is no longer used because bonds are not quickly liquidated. The M1 is no longer used as a guide for monetary policy in the U.S. due to the lack of correlation between it and economic variables. The M1 money supply was a much more constrictive measurement of money supply compared to M2 or M3. M1 money supply is reported on a monthly basis. Okay, so yeah, this is like really liquid, right? Like really liquid pieces of assets is basically M1. If I'm understanding that correctly. But the funny thing is, in the hearing, they mentioned, and I'm keeping an eye on, as soon as they come out of recess, I'll be bringing that back on the screen. But when they talk about, she said the CBDC will not be lendable, right? So basically, and we've talked about this in the other presentations where we've studied CBDCs and how it's being talked about across the world, where the CBDC wholesale treated as a reserve asset, therefore not lendable, which is just weird to me. Like that's, and then when he questioned her on that, she had trouble answering that, and I'm like, I think that's because I don't think many of the people talking about this have fully thought this through. When he talk about CBDC not being M1 money supply. And I'm trying to even make sense of this garbage in my head now as we talk about this. But it's just going to be treated as a reserve asset. So I think the difference is what she make, because she hasn't, I don't think she's really used the term wholesale versus retail CBDC. Yeah. It's just, all right, let me try and talk through this, my thinking. So CBDC, unintermediated would be wholesale CBDC held as reserves. Then you still have your regular M1 money supply, deposits, etc., from the retail. In case there's a run, I guess the CBDC could be liquidated to cover any calls. Makes sense. Okay, I see how she's thinking about this. But I think that's different from looking at a retail CBDC, because a retail CBDC would have to be lendable. It wouldn't make any sense for it not to be lendable, because if I'm depositing CBDC into your institution, how does your institution make money if it does not lend out? So if it's a retail CBDC, that means everybody's earning CBDC from their jobs or whatever it may be. But banks basically make money by lending out our deposits. So what she was referring to was a wholesale CBDC. I don't think she knows the difference between wholesale CBDC and retail CBDC, even though she used the term retail CBDC, or there's something missing here. All right, I'm sorry. I just had to think through that really fast to try and understand the conversation. This stuff can get really complicated really quick. Cassius Cam said, gang, 21 more days and I'm done for the season. Hotep would die. Thank you for the super chat, Cassius Cam. Cassius Cam is, you'll see him in the intro to Hotep's Been Told You will be live tonight at 8 p.m. But Cassius Cam, in fact, is one of those people who works on the fires out west, to prevent forest fires. So he's like Smokey the Bear. just make financial products to shift between the two. Yeah. I think they're going to use some sort of technology. Jonah has given me another Spooner quote here. Thank you, Jonah. It's really long here. I'm going to have to take some time to sift through that. Why wouldn't they have both retail and wholesale CBDC? Well, I think they will. Tari said, is she saying it's not easily liquidated? I would say it's easily liquidated. It's just, I think there's going to be some mandate, right? And this comes back to Basel III, right? So today they had the Basel III hearing. Right before this, they had the Basel III hearing. Actually, not right before this, like several hours. It started at 10 a.m. this morning. I listened to it. And Basel III is talking about the amount of reserves that banks have to have on hand. And I think it went, I think Basel II was at 2.5 and the new one's at 7%. So banks are pushing back saying, it's unfair. And, you're making us have to keep more cash on hand and that whole thing. So it's interesting that Basel III is in conversation right along with this, because as they're raising the amount of, reserve liquid assets that a bank must have on hand, as we saw with SVB, et cetera, and the other bank. I'm trying to remember the other bank. It's like Federal something. I can't. Not Fidelity. Chat. It was SVB. What was the other name of the bank that had the banking collapse? Earlier this year. I think it starts with an F. Damn, I can't remember the name of that bank. Anyway, so they're basically saying, you need to keep more assets on hand, and then, restructuring, what types of bonds they have, because SVB followed regulation and said it should have long-term bonds, when really it should have kept short-term bonds so it could cash out quicker. Long-term bonds take longer to mature, of course. But yeah, so it's just funny that Basel III is in conversation at the same time as this, because if they have to keep more cash on deposit, then that means they're going to keep more CBDC on deposit. What else is the chat saying? Yeah, she did use the term retail. She did. One trad says, all good. The overall mortgage rate is 5%, let's say, but 40% of your mortgage payment goes towards interest alone. That 5% doesn't really exist. It's a really good point. And that comes down to a term called amortization. Which I gotta be honest with you, I don't fucking understand that shit. Back when I sold mortgages, I didn't understand it. All I know is there's this thing called amortization. I'll show it to you. Let's do 30-year amortization. Let's go and pull this up. And I'll show you an image here. It's like, somebody would have to explain this to me. And maybe I understood this at one point and no longer do, or just forgot. But yeah, so it would come down to a chart like this, right? And let's fix this. So here's like a example of an amortization chart. Let me fix this on the screen. I probably should have created two windows. This is what is this, a 10-year? Is this a 10-year mortgage? What is this? Oh, it's a screenshot. About to say. Here's one. Is this one? So it's an annual interest rate. So I'm looking at this chart here, and I might have to take a second to try and figure this out, and I might need a calculator. So the interest is 163. Jeffrey Brown sent me $20 on Cash App. My Cash App is Hotep Jesus. Thank you, Jeffrey Brown. Appreciate you. Hold on a second. Let me try and do a calculation and see if I can figure this out. Yeah. Okay. Yeah, I got it figured out. Yeah. I figured it out. So balance. Oh wow, and this is actually starting at month 342. But I think, how does this work again? The payment is 2147. 7.6% is that $163 you see there in interest, and then you have that amount going to principal. Yeah, in the amortization table, I just remember what happens. I don't remember how it works, but I remember what happens. The further you get along, the more you end up paying into principal than interest. But how that 5%, I just remember we used to pump it into an amortization calculator, like a special calculator that did the amort. But I'm sure this is like, this amortization thing has got to be some fucking scam, yo. Anybody knows how it works? Amortization schedules or tables are often used to show how each payment is allocated between principal. Yeah, but if it says 5%, I'm like, how does that make sense? Familiar Human says interest up front, they get their money first. Right. But how do you calculate the 5%? Because if you take 5%, 5% of what? 5% of the payment? The amount applied to the principal gradually increases while the amount applied to interest decreases. Yeah, that makes sense. The amount applied to principal gradually increases. Yeah, well, right. Okay. Yeah, I get that. But what is the 5%? Where's the smart people in the chat? Come on, smart people. Where y'all at? I need somebody smarter than me in here to explain this shit to me. I think it's like your interest is always being compounded every second versus daily. Teddy Hammond says it ends up doubling the cost of the property by the time it goes to term. So our payments. Yeah, see, like nobody knows how this shit works. I need somebody who's like Series 7 certified to explain this shit. Yes, in the beginning you pay most. Yeah, I know the what. Yes, it's just how much interest versus principal gets paid over the life of the loan. Yes, but how? How is this calculated? 5% of the loan amount divided by 360-ish times the days of the month. Oh shit, 5% of the loan amount? Let's do the math. Hold on, let me see that. But that still doesn't make sense. Because he says here 5% of 400,000 would be what, 20,000? Because you're paying interest on the remaining principal. Chad, call in. Every month? Oh, that's wild. Hold on, Chad. Call the line. Don't nobody but Chad call in. I want Chad to explain this shit to me because I never did sit down and learn this. Chad, 202-596-5631. 202-596-5631. Chad is my in-house high IQ white guy. He's one of my handlers. Call in 202-596-5631. Chad, if you got time, explain this to me. But now it makes sense. So Lee says it's 5% of 400K, but no, it's 5% every month of the principal. This is why sometimes I need somebody smart and white to explain this shit to me. Where's my phone? Cadillac, 202-596-5631. He's 10 seconds delay because of he's watching on YouTube. And I'm keeping my eye on this hearing. This is a long recess. What are they doing? Had a bad lunch? Cadillac.
I object. You automatically treat me like a superior just because I'm white.
Well, that's how America works, sir. You're gonna have to deal with it.
Yeah. So your $400,000, your loan, that 5% is $20K. You pay that split up over the 12 months, and then the rest of it goes to the principal. So you're only paying like the tiny little. So they amortize it out where you balloon. Basically, what you're doing is you're paying that interest on the whole loan. You're paying that interest split up over the 30-year mortgage, but they balloon it to where you're paying most of the interest up front because they don't want to get stuck. If they let you just split it 50-50, you know what I'm saying? It's their way of making sure they get their money for loaning you the money.
Right.
And then they also get their principal back. So that way, if you hang with the loan because you can't pay it, they at least collected their interest, and then they can go get whatever they need to out of the hard asset.
Oh, okay, that totally makes sense. So that's why when you're making these monthly payments, very little is going to principal. It's going to the $20K, whatever that is.
Mm-hmm. Yeah. So that way, if you only last 5 years and then you lose your job and you can't, and they have to foreclose on you, well, now they get the house and the land, and they got all that principal out of you before, so.
What if you pay only the interest? Don't they tax something back onto the principal?
If you pay, I mean, they have the interest only. There's interest only.
Right, with the interest only, right?
Holy cow, those things are terrible. But yeah, I mean, you're not getting any principal at it. You're not gaining any equity,
right?
In your investment. But I mean, yeah, you could do that. I think it's stupid. It's just basically it's like you're renting it from essentially. But the one thing that a lot of people, if you have the means and the resources to do it, if you were able to get a good loan like for the last 3 years before they started hiking the interest rates about a year and a half ago, then you could probably, what you could do is you want to dump a lot more, get rid of that interest early, and pay that thing down earlier. If you can afford to make an extra payment,
right,
every year by just doing what you do is you pay some people do biweekly payments. Some people will make just one extra lump sum payment. I don't know. To me, this is the way I look at it. I have a kind of a retarded philosophy on this, but I just rock with it. $400,000 in 30 years is going to look like a drop in the bucket. And the way I look at this sort of stuff is, as cool as it would be to pay cash or pay your loan down automatically, if you're mortgaging a house anyway, you might as well just rock along and save your money and invest your money elsewhere, because you can get a better bang for your buck than the 3%, 4%, 5%, 6% that you're going to get just by saving that interest. So I choose to invest my money elsewhere. So,
my man, appreciate you. The hearing's back on. We're gonna go back to the
CBDC
coverage.
is a solution in search of a problem. This reality is magnified by the fact that the U.S. payment system is already being modernized both through private sector developments like stablecoins and through public sector improvements to existing payments infrastructure. The significant privacy and civil liberties concerns associated with CBDCs, as the witnesses have discussed here today, would be mitigated in the private sector through well-regulated stablecoins or other payment innovations. Yesterday, we had a hearing with CFIUS where we discussed cybersecurity challenges facing the national security of the United States. Along those lines, Dr. Michel, what cybersecurity risks are associated with CBDCs, and are these risks apparent in the private sector?
So I believe this is a question of centralization versus decentralization. And if you have a CBDC, you ultimately have one major point of failure. The Fed, presumably one way of doing this, or not presumably, one way of doing this would be to have the Fed have a database. Well, we know the Fed's been hacked. even if the Fed has multiple databases, it's the Fed being hacked, as opposed to having multiple private companies all across the country. If Capital One, for example, has a hack or a cybersecurity problem, everybody in the country is not immediately at risk, only their customers, and that's a problem for them.
You're going in the direction I was going to go. At the end of the day, best practice for large private companies is to have cybersecurity insurance. You have a breach, and you do your best to mitigate it. A breach is inevitable, and you know that, so you insure against it, and then you take steps to address the breach, and then you get sued, and you pay the individuals that you damaged money because you did them wrong. That's just our legal system. So I want to point out that the CFPB had 250,000 of their files leaked in what was the most preventable breach I've ever read about. And the people that were damaged, the citizens that were damaged, that had their personally identifiable information used to do a wide variety of schemes to generate money from the hackers, they don't have any recourse. There's no recourse. So not only is this public option bad for a wide variety of reasons, but in the event of a breach, which again is pretty much inevitable, there's no recourse to make the individuals whole. So I think that's something that we need to think about. The government's not good at this stuff, and they're not good at making people whole when they make mistakes. So just wanted to throw that out there. Following up on this comparison between the benefits that a CBDC could bring versus the benefits a private sector stablecoin could bring. Dr. Michelle, again, I see you've worked to push back at the promises made by proponents of CBDCs. Based on your research, can you explain what, if any, technological advantage a CBDC has over the private sector?
None, and this is properly viewed as a government reaction to a private innovation. You could call it Bitcoin, or you could just call it distributed ledger technology in general. Mm-hmm. That's what this is about. This is about the government seeing an innovation that possibly threatens their control over the payment system, and it is a movement to come up with something that takes that back. And it just so happens that what they're coming up with here is something that goes even further than where we are without the CBDC. So it is about control.
These are the same people that tried to require mandatory reporting for transactions over $500 to pay for their pipe dream bills that they were trying to push through. Switching gears somewhat, Professor Skinner, we held a hearing on CBDCs last year. I asked former Federal Reserve Vice Chair Lael Brainerd what can be done to strengthen the dollar's status as the world reserve currency. Is a CBDC something that would strengthen that status, or would it weaken it?
Thank you for the question. It certainly, in my opinion, would not strengthen the dollar's status, and it could potentially weaken it for the following reasons. As I mentioned in my opening remarks, the status of the dollar is undergirded by our commitment to the rule of law, democratic institutions, having a judiciary that enforces property rights, and perhaps most importantly, maintaining the dollar as a stable store of value. So for there, it's important that the Fed maintain its fight against inflation. And with the issuance of a CBDC, there will absolutely be a propensity to over-issue, to, for example, monetize the deficit. And if that were to happen, that would undermine the status of the dollar.
Thank you. Mr. Chairman, I yield back.
I thank the gentleman. Now we recognize the gentleman from North Carolina, Mr. Nickel, for 5 minutes.
Thank you, Mr. Chairman. As a co-sponsor of our Subcommittee Chairman French Hill and Jake Auchincloss's Power of the Mint Act, I believe only Congress has the power to authorize a central bank digital currency, or CBDC. The Constitution is very clear about this. Article 1, Section 8 states that only Congress has the authority to coin money. So this shouldn't be a partisan issue. And much of the work that we've done at the committee level and certainly at the subcommittee level here has been bipartisan, and I want to acknowledge that Chairman Hill's approach on these issues. We've been very involved in a lot of these, and that continues with this issue as well. CBDCs do have the potential to be an important innovation. They could enhance financial inclusion, reduce transaction costs, and increase the efficiency of our monetary policy. The Atlantic Council estimates that 130 countries are currently exploring a CBDC. We should too. The United States must remain the global financial leader especially with the dollar's role as the global reserve currency. We can't afford to fall behind or lose our global influence. On the other hand, we must approach this innovation cautiously, especially in light of the Chinese Communist Party's use of its CBDC. I have concerns surrounding privacy and surveillance, which is why we need to continue studying this issue. The Chinese Communist Party model raises red flags about the potential for governments to exert unprecedented control over their citizens' financial lives. As representatives of a democratic nation, we need to be steadfast in safeguarding the privacy of our citizens. As we deliberate on this crucial issue, let's remember that our ultimate goal is to create a financial system that empowers all Americans while preserving the values that make our nations great. Now, thank you again to the witnesses for being here. First question, Ms. Paradon. One of my concerns with CBDCs is that they could impact the availability of credit for my constituents, especially during economic stress because of a reduction in bank deposits. How do you view this concern?
Yes, we share that concern. A so-called flight to quality is something that we fear would be almost inevitable
It's called
were
Gresham's
a
Law.
retail CBDC to be issued by the Federal Reserve. In times particularly of financial stress or instability, a CBDC would be viewed likely as the ultimate safe asset, and depositors would likely be incentivized to pull their deposits out of the banking system and put them into CBDCs as a safe asset, which would reduce the availability of deposits available to lend out and moreover increase the cost of credit.
Thank you. Mr. Carrillo, to you, given the US dollar's role as the world's reserve currency, why is it important for us to join the 130 countries studying CBDCs?
Thank you very much for the question,
Man bun.
Representative. I appreciate it. I think that the United States has not only the privilege and the freedom, but the responsibility to lead on this issue and to especially make sure that civil rights are incorporated into
Civil
the next system.
rights. Oh my
I believe we
fucking
can do
God.
that. I believe that we have the innovation capabilities, and together working together, entities in the public sector, in the private sector in terms of procurement and operations, and in our research institutions, we can all move forward together. There are many examples of having done so before. President Lincoln created cash after the Civil War in order to help everybody have day-to-day transactions throughout our economy. Today, we have cutting-edge technology in various other sectors in the government, including in the U.S. military, where they use stored value cards known as Eagle Cash in order to make offline payments.
The
Thank you, Mr.
greenbacks
Chairman.
were
I yield
back, though. The greenbacks that Lincoln had
I
were
thank the
back.
gentleman for his questions.
I think they were
Now I
land
turn
backed
to Ms.
and
Houchin
deposit backed.
for 5 minutes.
Thank you, Chairman Hill, Ranking Member Lynch. Thank you to the panelists today for providing your testimony and speaking with us today.
I don't know what the reserve ratio
When I
was, but
talk
those
with
were at
my
least partially
constituents
backed.
back home about financial technology and crypto issues, a common concern that I hear is about the possibility of a central bank digital currency, or CBDC. From privacy issues to the threat of debanking political enemies, people back home have told me that government surveillance and the total control that is threatened over their wallets is too great a threat to balance against any of the proposed benefits a CBDC would bring. Mr. Roos, we have all heard the stories of China utilizing its CBDC to surveil its own citizens. Obviously, the United States is a completely different country than China, but if the United States were to issue a CBDC, in your view, what would be needed to ensure that it wouldn't resemble something like China?
Thank you for the question. I think that it's important for this hearing, first of all, to state that most of the concerns that have been discussed in this hearing are related to retail CBDC, meaning CBDC that is issued directly to citizens. And in that case, as I stated in my opening remarks, any digital representation of the US dollar should benefit from the privacy and trust as stated in the Fourth Amendment. So I think that first of all, I think it's important to make that distinction. Second of all, if the US government were to decide to issue a retail CBDC, unlike wholesale CBDC, I think that it is going to be critical for the government to show and evidence that there is no ability for the government to see transactions of citizens. I personally would be against such an act.
Thank you. And when speaking about CBDCs, the threat of debanking, that certainly comes up almost universally, especially when talking to gun manufacturers and such in my district. Operation Choke Point under the Obama administration, we saw instances where Americans who were involved in what political opponents determined to be undesirable industries like gun manufacturers would be cut off from bank accounts or unjustly severed from lines of credit simply due to the businesses that they're in. With a CBDC, not only could the federal government tell banks and other financial institutions what services they can or cannot provide to different businesses, they would be able to track potentially every dollar that's in someone's wallet, where it goes, and what it's used for. Mr. Roos, in your testimony, you emphasized that Digital Asset built its products and services with privacy as its core. Would you be able to walk us through a transaction that occurs using Digital Asset's products and explain how privacy is preserved throughout the life cycle of that transaction?
Sure, thank you for the question. When we designed our product, the product itself allows
Now, this
the
guy has a
issuer
financial
of any
interest.
asset to determine who
So
has the
he's a bit
rights
biased.
to look into a transaction. So in the case we're talking about here, if we wanted to have privacy included in the smart contract of the money, it would state that any movement of money would only be visible to the sender of money and the receiver of money, for example, and the issuer of money would be blinded. So all that the issuer would see is the overall balance, but would not see any underlying movements of the money, for example.
Okay, thank you. You also stated that Digital Asset is seeking to modernize financial infrastructure using blockchain technology. While this goal seems to be aligned with what wholesale CBDCs are seeking to accomplish, it appears a far cry from what retail CBDC purports to do. Is that a fair assessment of Digital Asset?
Yes.
In your view, is it a mischaracterization to discuss the modernization of the United States back-end financial infrastructure as a wholesale CBDC?
As long as we're talking about modernizing FedWire or FedNow in order to eradicate reconciliation, the answer would be yes. Again, if it's to introduce central bank digital money directly to retail customers, then the answer would be no.
Okay, thank you. As my colleagues and you on the panel have highlighted, the negative consequences are pretty great. And the recent stablecoin legislation that we passed out of this committee will establish guidelines and safeguards and a clear path forward for a private sector solution that brings all the benefits of blockchain without any of the privacy or politicization concerns of a government-controlled CBDC. It's my hope we can work together to see that this bill becomes law to create economic opportunities and innovation across the country without putting constituents' privacy or financial well-being at risk. Thank you, Mr. Chairman. I yield back.
Thanks, gentlewoman. And now the gentleman from California, Mr. Sherman, is recognized for 5 minutes.
I joined the last speaker and colleague in a concern about Operation Choke Point. I know there were some on the Democratic side who said, yes, go after payday, go after gun manufacturers. How will that sound when Planned Parenthood can't get a bank account? The power to take somebody out of the banking system is the power to impair, if not destroy them. We currently have a balance between privacy on the one hand and law enforcement on the other, and I'd like to keep that balance pretty much the same. That's why I oppose a cryptocurrency ecosystem in which millions of dollars can go from one unnamed entity or person to another unnamed person, and there's absolutely no way for law enforcement to ever know who was on either side of that transaction.
What?
On the other hand, I want to maintain the current balance. I don't necessarily want the Fed to see every transaction. We have a system now where suspicious transactions are reported to law enforcement. We already have a digital dollar. I can go several days without touching a green piece of paper with a picture of a dead president on it. And I'm still waiting for those Tubmans, but I think by the time we get them, we may not use them.
That's not the
question.
same as a digital dollar.
And look, we need a much better digital dollar. It's
That's not the
still
same as
too
a digital
expensive,
dollar.
too cumbersome to be able to pay money one way or the other. But I think we'll get there with or without the Fed. As to the Fed, let's point out that the
not the
Fed
same as
is
a digital
really
dollar.
bad at retail. We have an ACH system which they administer, and it's so problematic that when I bought a house, every single note I got from the escrow agent in flaming letters, I couldn't read anything else. Don't trust any email you get as to where to wire the funds. Why? Because in spite of a lot of questioning I've done in this room, the Fed has refused to follow Britain's lead and have a payee maxing system. So if you can convince a new home buyer to send their money to account 12345, it never reaches the escrow company. It goes to a Nigerian prince. And they don't even have to pretend to be they don't even have to open an account in the name of the escrow company. I can imagine how the Fed would deal with thousands, or correction, millions of different accounts. But we already have a system, unfortunately, where you can open an account at a bank without ever showing up in person. All you need to do to steal my paycheck is to steal my paycheck and my driver's license and maybe a cable television bill. Then you open up an account in my name, you flash my driver's license, the fact that your picture doesn't look anything like me, in which case be thankful, doesn't prevent you from opening up an account in my name. So I would like to see a system where human beings have to talk to another human being to open up an account that's in their name, and I can't imagine that Jay Powell is going to be any part of something that is that retail. But I join with others on this concern, and I have a question for Mr. Cabrillo. I'm concerned about the effect this is going to have on deposits at regional banks and credit unions and smaller banks. We tend to focus on the financial system, but we need to see local business loans made. And Uncle Jay Powell is not going to loan money to my local pizzeria. What effect do you think this is going to have on the ability of local businesses in my district to borrow money?
I believe the question is directed at me, is that correct?
Yes.
Thank you very much, Representative. I appreciate it. So I would say that our deposit insurance structure, our system of how we handle deposits legally right now is actually quite broken. And I would welcome revisitation of that post the Silicon Valley bank crisis. I think we are looking at a situation where we need to clarify, streamline, and bolster the deposit insurance and protection structure. And in fact, digital fiat currency provides us with an opportunity to do so. I would say that further federal government control of the deposit system should actually be welcome in the sense that it provides stability and also allows and creates space for commercial banks to engage in credit creation and maturity transformation, which should be the actual goal of banking.
Thank you.
Gentleman yields
I don't
back.
think he answered the
I'd like to
question.
thank our witnesses
Pretty
and
sure
our
he
members
did.
on both sides of the aisle for their participation in this hearing. Thank you for your testimony today. Without objection, I'd like to enter the following documents into the record. My letter to the Attorney General from last Congress on the Department's assessment of whether legislative changes would be necessary to issue a CBDC, and the follow-up letter that Republicans sent in March of 2023, and including in the record letters from the American Bankers Association, the Electronic Transaction Association, Independent Community Bankers of America, and the Credit Union National Association. Without objection, they are included in the record. Thank my colleagues on both sides of the aisle. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. This hearing is adjourned.
Hold on a second.
We have a system now for Mr. Bill. Then you open up an account in my name. You flash my driver's license. The fact that your picture doesn't look anything like me, in which case, be thankful, doesn't prevent you from opening up an account in my name. So I would like to see a system where human beings have to talk to another human being to open up an account that's in their name, and I can't imagine that Jay Powell is going to be any part of something that is that retail. But I join with others on this concern, and I have a question for Mr. Cabrillo. I'm concerned about the effect this is going to have on deposits at regional banks and credit unions and smaller banks. We tend to focus on the financial system, but we need to see local business loans made. And Uncle Jay Powell is not going to loan money to my local pizzeria. What effect do you think this is going to have on the ability of local businesses in my district to borrow money?
I believe the question is directed at me. Is that
Your
correct?
name is
Yes.
Mr. Carrillo,
Thank you
right?
very much, Representative. I appreciate it. So I would say that our deposit insurance structure, our system of how we handle deposits legally right now is actually quite broken. And I would welcome revisitation of that post the Silicon Valley bank crisis. I think we are looking at a situation where we need to clarify, streamline, and bolster the deposit insurance and protection structure. And in fact, digital fiat currency provides us with an opportunity to do so. I would say that further federal government control of the deposit system should actually be welcome in the sense that it provides stability and also allows and creates space for commercial banks to engage in credit creation and maturity transformation, which should be the actual goal of banking.
What?
Yes.
Thank you very much. It's actually quite broken. And I would welcome revisitation of that post the Silicon
like he's
Valley
bloviating.
bank crisis. I think we are looking at a situation where we need to clarify, streamline, and bolster the deposit insurance and protection structure. And in fact, digital fiat currency provides us with an opportunity to do so. I would say that further federal government control of the deposit system should actually be welcome in the sense that it provides stability and also allows and creates space for commercial banks to engage in credit creation and maturity transformation.
Oh, he's basically saying that if we put the control of credit in the hands of the state, then
transformation, which should be the actual goal of banking.
we'll see credit creation, right? Loans going out to people. However, we must go to the 10 planks of communism in that case. Which window? Let's pull it up in this window. Let's pull up the 10 planks of communism. Here it is right here. And let's go here. Let's go there. Take that off. Actually, let's just change the source. So you see here, right? 10 planks of communism. To seize power and destroy freedom, according to Karl Marx. Centralization of credit in the hands of the state. Centralization of credit in the hands of the state. This is Marxism. By means of a national bank with state capital and exclusive monopoly. The people who are pro-CBDC are Marxists. They're quite literally Marxists. So where he makes an argument and says allowing the state to control credit creation is Marxist. But also, they talked about competition, right? They talked about what's going to happen to your bank. What's going to happen to your bank? I believe in that last piece there, the lady, when the line of questioning, I'm not sure, was it this part? Anyway, to get to the point, it was basically talking about intermediaries, banking institutions, and what would happen to them, and how the fact that they would not be able to compete with the state. They would not be able to compete with the state, which would then create a state capital monopoly. It's like purely Marxist. It's like purely Marxist. It's absolutely insane. What time is it? 4:36. All right, I'll take some calls. Hold on, let me open up the phone lines. I'll take some calls. I'll take some calls for about 25 minutes here. Hold on. Text Hotep in your name to 202-596-5631. I see Eric. Text Hotep in your name to 202-596-5631. Eric, go ahead and call in. You can please interview Javier Millet. Okay. Thank you for the super chat. Yeah, I was about to say familiar human. It did not seem like he answered the question. Now here's something that I want to point out that's quite eerie, right? While we're all here to talking about this, right? What's happening on Twitter? Because I did look while they were talking. I was looking to see if anybody was talking about this. That's what I wanted to see. So I went to the trending topics, and then we get your usual distractions, like heavy distractions. Hunter Biden indictment today.
Call from
Hotep Eric.
We got Hunter Biden. We got Ivanka and Jared are trending. We have Maganomics is trending, right? This is an attack on some sort of MAGA tax scam is trending. They call it Maganomics. So this is what everybody's talking about right now. I just find it quite eerie that while we're having this hearing, all of the big distractions come out. Quite fascinating. Hotep, Eric, what's up, bro?
How's it going, brother?
Life is good, man. Talk to me. What's on your mind?
First time caller. I've super chatted a couple times. Love your show.
Thank you.
Watch it just about every day.
Nice.
You were saying earlier you like to geek out. Let's geek out, brother.
Let's geek out.
All right. So
Hold on.
you
Let
were
me get
trying
my
to
Google
remember
ready.
earlier.
Let me get my Googles ready. All right, I'm ready. Go ahead.
So you were talking earlier about you couldn't remember that thing that was like a Ponzi scheme and it died in like earlier in the year. That was FTX, Sam Bankman-Fried, I think.
No, it was another one.
Ooh, yeah, there were like three banks. That
It was
collapsed.
3 banks. It was SBF, FTX, and another one. But continue.
I don't know if you saw, but Bankman-Fried just got slapped with 20 years.
Did he?
So, yeah.
What?
Take that as you will. I don't know if he'll actually serve 20, but that's what he got.
When did this happen?
Oh, God, yesterday?
Let me see. Because I saw something different. I saw them trying, I forget what legal tactic, but they tried a legal tactic to loophole him out. And you're saying that didn't work, I guess?
I don't think so. I know he was like chilling in, what was it, the Bahamas?
Yeah.
Well, the Bahamas were trying to get the money and distribute whatever they could get to people who had been defrauded. But yeah, I don't know. All I read yesterday was he got 20.
No, that's not true.
It isn't?
I'm not finding that. OneCoin founder given $300 million fine, 20. It says FTX founder Sam Bankman-Fried is going to jail for witness tampering. That's 1 month ago. I don't see anything here about this sentence.
Yeah, I got a push notification yesterday from Ground News. I should have looked at it. That's my bad.
Yeah. Check that. This is like I said, I saw some SBF legal attempts yesterday. Did not see this sentencing to 20 years, and I'm Googling it now. Does not pop up.
Do you want me to look? You said you were going to do like 25 minutes. I don't want to capitalize the time. And
yeah, look and call back.
So if it's okay with you,
Mm-hmm.
that was just one point. But is it okay discussing the topic of the day?
Please, go
CBDCs?
ahead.
All right. So there's an article from Fox News. Crypto Wires brought this up too. That it's been a talking point. The only thing that I've seen, like the only candidates who've talked about it, like even given it lip service, is DeSantis, Ramaswamy, and RFK Jr.
Right.
All of them basically say the same thing. It's an instrument of control and oppression, undermining our liberty and privacy of people who haven't committed any other crime. Completely agree with that, but it's just been talking points. You know, they haven't really laid out a plan about what they plan to do.
Right.
Who would you want to see really like lay out a plan, either how we can bridge between what people on the left call an inevitable outcome, or, you know, an airtight plan to make sure it's banned forever?
Who does not concern me. And I would say everybody. I'd want all the candidates to talk about this. I think it's the most important issue to talk about, right?
Yeah.
And lay down clear legislation to. Well, let's go back to what Mr. I don't want to mess his name up. His name is Dr. Norbert Michel. Now, Dr. Norbert Michel said the problem, in fact, really isn't so much the CBDC as it is the Bank Secrecy Act of 1970. And he's like,
Yeah,
you know,
that makes all this impossible.
yeah, that's the thing that makes all this
However you
possible.
slice it. Yeah.
So if we don't repeal and revisit the Bank Secrecy Act, then it's kind of like we're just sort of, you know, playing with ourselves here, for lack of a better term.
I completely agree.
Yeah.
And I do see the importance, like while we have market conditions where every developed economy relies on like the health and stability of every other developed economy.
Mhm.
I don't know if you remember, like when Greece collapsed, what was that, 15 years ago?
Yeah.
Everybody's like, oh my God, the EU's going to die. It's going to cause a global, oh my God,
Hysteria.
depression again.
Yeah.
You know,
Yeah.
it's ridiculous.
Yeah.
What I want to see is decentralization. You know, if countries want to trade with one another, that's fine. But when you have a situation where if we die, China dies. If China dies, we die. If Japan dies, we die. Like, that's not kosher.
Right.
I want to see, and I'm pretty sure most of the audience would agree. I want to see maximum decentralization, as long as it's not like, you know, everybody is their own bank. You know, that might get a little hairy, but
that will get a little hairy. It's going to get
maximum
very, very hairy.
workable decentralization is what I would like.
Yeah.
And you saw that Congressman Sherman. He was saying, I don't want to see any crypto. And you were shaking your head. You were upset with him.
Yeah.
But he did accidentally, I think, make a good point. He was saying, okay, well, what if they don't give a bank account to Planned Parenthood? And all of us are talking about this, you know, just what we're expecting Democrats to do with this power, right?
Mhm.
Because you're absolutely right that it is, at least on its face, Marxist.
Yeah.
Even if it's post-Marxist, even if it's like lipstick on a slightly different pig, we're all thinking about what Democrats are going to do with this.
Yeah.
But he, I think, kind of accidentally had a brilliant insight. What happens when Republicans have that power?
Right.
You know, and they start shutting down our sacred cows.
Yes. Yeah.
That's what I'm thinking about.
Well, yeah. I think that, you know, the congressman you're talking about, to me, was like he was hitting 50-50. Like, he'd make a great point, then he'd say something stupid. He'd make a great point and say something stupid. So I wasn't too upset at him, because every time he made a point, at least he backed it up with something that somewhat made sense, you know? I think he's a bit antiquated when it comes to this conversation. I don't think he's caught up on the technology and what this thing can and cannot do. But it sounds like the whole, you know, what if they ban abortions is more of like lip service than anything else. But yeah, I really didn't enjoy his comments too much.
I would say with this or anything else, I try and look at not just who's in power now who might abuse it, who, hypothetical new party 50 years in the future, how might they abuse it too? Not just, the present conditions. And I think it's important for people to consider that. It's like, do we want the government to do it? Yes. And there were a couple people who brought it up. One, in these explicit terms, who are these angels that are going to run this shit?
Mm-hmm.
Right? And Milton Friedman talked about that a lot. I appreciated that.
Yeah, Milton Friedman, one of the GOATs, yeah.
Sure is.
Yeah.
I just wanted to, my last point I want to make is this crypto bro frame, right? It bothers the shit out of me.
Okay.
Because it makes anyone who supports decentralized finance look like an idiotic young person who doesn't know their ass from the ground as it relates to economics, right?
That's true, yeah.
Every economy is built on people who don't understand the system participating in it, in my view.
That's true.
Right?
Yes.
And so...
But isn't that a
most
problem?
people who are, I don't think so, as long as it's structured properly. And I just think,
right.
it makes
Well, that's
people who are deep in this look stupid.
Well, let's stop right there, right? Like, that's the condition, as long as it's run properly, right? That's why it's important for people to understand how the systems is supposed to run or is running, so they can understand right from wrong.
Right.
Right.
And under present circumstances, there's no way for this to be run properly. Absolutely not.
There's no way
right,
for our
anything else?
economy to run properly, even if we just started repealing a bunch
for
of stuff.
CBDCs to be run properly.
Oh no, yeah, nah, definitely not. Yeah. I mean, the dictator Hotep Jesus could make the CBDCs work, but that's another story for another day.
I'd vote for him. I'd vote for him.
Thank you, I
All right.
appreciate that. Hey, quick
care,
question before I let you go.
Sure.
You said you've been watching the show for a while now.
Couple years. Yeah.
What makes you tune in? I'm a marketer, so we always have to ask these questions to find out what makes people buy, right? So what makes you tune in to the show? Is it certain topics? Is it my delivery? Is it the big brain stuff, the small brain stuff? What is it?
100% the delivery. And I think there's a good mix of, and I don't like the big brain, little brain frame either.
Okay.
But I think you have a good mix where in the work that I've done in my adult life, I try and focus on communicating effectively to the middle 80%. Does that make sense?
Yes.
The 10% at the top, they're going to get it no matter what you say. 10% at the bottom are, they're hopeless no matter what you say. So I try and focus on that middle 80%. And I think you do a great job of that. You're kind of in the same vein as like Dix, Timcast, Scott Adams. I love all you guys.
Oh, dope. Those are some big names. Thank you, bro.
Yeah.
Hey, appreciate the call, bro. Just keep tuning in.
Yeah.
I appreciate
Hotep
you,
and
man.
Bill.
Hotep and Bill. He said Scott Adams.
Hotep Jesus. Hotep Jesus. Hotep Jesus.
It's the voice of Scott Adams right there. Salute. Salute the GOAT. Scott Adams. I mean, he's made mistakes, but we've all made mistakes. I'm not too hard on the old geezer. Who is this?
Call from
Murphy. Goldstein.
What up?
What up, bro?
Chilling. Great show. Great goddamn show. That shit got me understanding a lot of shit.
Okay. Thank you.
One thing I want to fucking convey that I did finally, I didn't finally understand it, but kind of it just dawned on me, is that while this is some extremely high brain shit, it's wrapped around a very low brain principle that everyone should be able to understand. That's quit giving motherfuckers that you don't know power over the functioning aspects of your life.
Oh, this a real Hotep brother.
You don't know any of these tramps all the way out there in D.C. You don't know them from a fucking hole in the ground. Would you give your neighbor that you don't know that type of fucking power over your finances, over your life? No. So why in the fuck would you do it If you're not going to do it with some nigga that you see probably every day across the street mowing his shit, why would you do that to some fucking tramps way all the way in fucking D.C. that you've probably never even met in person? For all you know, they don't even exist. That shit could be a fucking hologram on your TV screen. That's an extreme example. But I'm just saying, you at least know your neighbor exists, and that nigga is not even going to look at your bank statement, not one time, ever in life.
Big facts.
Quit giving tramps you don't know power over your life. You get that principle down, things go a lot smoother. And I want to close on this note. If you using motherfucking body wash, you're out of pocket for a couple different reasons. I'm not even going to get into the femininity of it. I'll just leave you with this. It's the biggest goddamn con job since Sam Bankman-Fried and FTX. Even bigger. Because all it is fucking shampoo. That's it. It's shampoo that they just said, oh, wash your body in it. And everyone was like, oh, okay, that's a great goddamn idea. It's been shampoo. It will always be fucking shampoo. Quit fucking up.
Big fact. Hey, salute. Appreciate you, bro.
Indeed, man. Hotep and Bill.
Hotep and Bill. All right, so remember I was talking about the bank failures? So I found them. I found the list of bank failures, and this is why I told you it started with the letter F. And this one sort of went a bit under the radar, but because I follow this stuff, I knew. So here you'll see. AK, call in, bro. Jonah, hold on, man. Hold on. You beating my phone down. Hold on a second, bro. Hold on, Jonah. Hold on, Jonah. Hold on. Let's close that one. Let's make this one better. So you see the list of banks here, and this is from the FDIC, as you can see there, and it's First Republic Bank, right? San Francisco. You see that right there? That's First Republic Bank. That's why I said it started with an F. So you got SVB here. This is one. This was March. Was SVB and Signature Bank, right? And then you had First Republic out of San Francisco, and then
Call from.
AK.
And then you have right here, you'll see, I'm going to fix the screen for you, and you'll see right there, the acquiring company is none other than who? JP Morgan Chase. They came in and they gobbled up the little guy, which is going to be a common theme as we see more and more banks fail and then be affected by the CBDC. So it's First Republic Bank that I was trying to think of earlier. AK, what up, bro? Welcome to the show.
What up, man? What up?
What's good? What's good, bro?
Man, I love the big brain content, man. Hey,
thank you.
Before I ask about CBDC and give some of my observations, I sent you an article that you probably already knew of, but I scroll the news every day because I make my TikTok videos and all that shit, and I came across this study that on a scientific level has been publicized now by the the who's of the scientific variety. They have confirmed that the second brain indeed does exist. So shout out to Master Focus, something that you've already made and created, and that you've talked about for a long time about your second brain and how it's important to be healthy. So I just sent that to you.
Where'd you
just
send
so you
that?
could. I DM'd you. I don't know the best way to reach out to you, but yeah, I sent you a DM on Twitter.
Oh, it's DM'd. Hold on. There you go. Sent link. Of course, I didn't get a notification for it because
that's all right.
Elon. Okay. Oh wait, no, this is not that link. This is. Oh, this is the link to the CBDC wholesale payment system.
Well, I sent that to you earlier today, just because we were
Wait,
you were discussing about
where's the second brain one? I don't see that link here.
You know what? And now that I think about it, it's in the Hotep VIP for HotepCon. That's why I said it. My bad.
Okay. The
Yeah,
VIP,
yeah.
the VIP, the secret. The secret
Yeah,
one.
yeah, the
okay.
secret VIP.
Oh yeah, I did see this. Yeah, I did see this. I did see this when you posted this. Yeah. Age-associated changes in lineage composition of the enteric nervous system regulate gut health and disease. Yeah. I'm going to have to get Project Rook and Tanai on this to tell me what the hell this means.
Yeah, no, I just figured.
It says, wait, the first line here is crazy. The enteric nervous system, a collection of neural cells contained in the wall of the gut. Wow.
Second brain, man, you've been on it. I'll be honest, before you ever mentioned it, I never heard a damn thing about the second brain, the enteric nervous system. I never heard about it, and when you said it, I was like, let me Google some stuff, and I was like, yo. So, I mean, again, Hotep's been told you. Hotep's been told you.
Yo, 1/2 of all mid-aged adult enteric neurons derive from the neural crest, whatever the hell that is. Wow. Yeah, so, again, this is a whole nother different type of geeking out. I haven't got back in my science studies in years. I'm on my finance studies these days, but I'm going to have to talk to Tanai and see what the hell this is about. Thank you for putting it on my desk.
Yeah, man, for sure. And now, when it comes to the CBDC hearing today, for one, I thought that it was fascinating. You know, I think that Dr. Michel, he's the only one on that panel that I think actually knew what he was talking about.
The white girl too. The white girl knew what she was talking about too, but she's not as good as Dr. Michel.
Yeah, here's the thing though. I get some opposition, controlled opposition vibes because, you know, I understand she's representing the banks, right? And she probably wants to keep her job.
Right.
But she was like, not right now.
Right.
But she didn't like definitively be like, yeah,
not that
never.
white girl.
Like,
not that white girl. The other white girl. The one to our right, her left.
oh, okay. Yeah.
Yeah. That white girl you talking about, she was an idiot.
Yeah.
She, you know, somebody sent her out there and set her up. You know what I mean? Like,
Yeah, it was not a good look for her. She did not have a great day. But you know, I tweeted and you sent out, you know, you retweeted me, shout out to that. Yeah, man. I mean, listen, CBDC is just a Marxist currency, and that's what it boils down to. And it's kind of mind-boggling how many people that are in the, you know, conservative space don't give a shit about this. And it's frustrating. And it's one of the reasons why I actually take time to watch what you do. You know, I would say, you know, I'm aware of probably dozens, right, of other, you know, political content creators that talk about political, social, cultural issues. But for the most part, I just watch snippets of their stuff because it you know, they're just doing it for a grift that is 100% just to the largest common denominator, right? Whereas is the way that you put together your information is, yeah, it's what you are interested in or whatever, but it resonates with, I think, what average people should have a general understanding of. And then you're able to really dive deep and give knowledge and specifics. And that's why I actually, when I first even stumbled across you, and today was a perfect example of that, is if you kind of scan all the other, you know, people that are out there in this space, you know, they might give like a segment here or there, but they don't really try and dive deep. So I appreciate, man, everything you've been doing, because it's been pushing me to try and educate myself to have a far better understanding of exactly what's coming, just because, you know, you don't want to be caught flat-footed. So I just wanted to shout out and recognize what you're doing, even though from a grift perspective, you know, it's not catching the world on fire.
Nah, I appreciate that. You know, I think it's just like understanding where I came from and where I'm at. And I think that, you know, being 20, even 30 years old and never having an investment portfolio, knowing, you know, how the stock market worked or anything like that was really like eye-opening for me. Even when I got into investing, I started talking to, like, just, you know, I thought all white people knew about investing. I started talking to white people and they were like, what the hell are you talking about? I'm like, you don't know about this stuff? And they're like, no. I'm like, really? So I'm like, okay, so nobody really knows what the fuck is going on. It's not a racial thing, but nobody knows what's going on. So it really motivated me to just dive in and learn. And I would say I'm only like halfway. I'm definitely intermediate when it comes to these subject matters. I'm definitely not expert level, but I'm working my way to expert level so that none of this stuff can go over my head when they start talking.
Yeah, no, that's kind of me and you have that same type of deal where I always thought that, when I get older, then I'll care about money.
Yeah.
And then when I actually got into, cause I used to have my Series 6 and 63. And when I did that, when I was like 29, I was like, oh man, like I am kind of behind the ball here. But when I learned about it, I was like, yo, like, so I understand like, the average finance, the crypto space is a little bit different because I want to know how it like functionally works, right? Because like the stuff that Cyprian does of like teaching you how to actually write code and write chain, blockchain and create your own mechanism to understand it. That's where I want to be. I'm not quite there yet because I'm trying to be the cheap route and like piece it together.
Yeah.
But yeah, man, I mean, I just appreciate what you're doing. And one last thing I wanted to throw out there. So one of my homies from college, he's actually Tom Emmer's chief of staff. Now, Tom is a little bit like, is he doing it for show or does he actually believe this stuff? But I know that he had a hand in picking the panelists today. Obviously with being in that committee. And so I think he's on the right path. And so I don't know for specifically Kay, cause she doesn't like him. She should open up her mind and just, hold this motherfucker's feet to the fire. He's done some stupid stuff, but I think that Tom Emmer he's a pretty nice dude, man. So just want to
I think she's got a personal beef cause that's her state.
Yeah, no, we're in the same state. No, that's the thing, man. We're both in Minnesota, right. and I because like I said, my buddy's his chief of staff. Like, I have a closer relationship. But that's about it, man. Great show. Keep up the great work. Hotep and Bill, baby.
Hotep and Bill. Jonah, get ahead, bro. Let me get my boy Jonah in here. He about to geek out with some tinfoil koofy takes. I know he about to go in. About to blow your mind. Pause. Oh, I love this meme. This meme is great. It says here how I feel after a daily dose of the Grift Report with Hotep Jesus. Big brain.
Call from
Jonah, what up, baby?
Nah, I said if you're good with things like that, FDIC, I'd already sent you. But hey,
okay.
Now the wholesale, they're gonna sneak it in with the SDRs. So this is all going to be they're going to try to sneak it all in on the SDRs, the special drawing rights, which is the IMF, which they already used since 1969. So that's what they're going to. And they already have all kinds of legislation. When you were reading yesterday, I'm a retard. I forgot to bring it up yesterday. That's why they do not need legislation to bring the wholesale in because they already have the legislation as the SDRs, special drawing rights of the IMF.
Yeah, because you can see they're always talking about retail. And they basically say they can't do anything about stopping wholesale. So that's why. Okay, that makes sense.
So they have the SDRs. I sent you a link to Congress. If you just go to congress.gov and you type in special drawing rights, you're going to find hundreds of legislation already passed, already introduced. There's actually a bunch that try to be introduced to limit the special drawing rights already. So that's something to pay attention to as well. I'm in communist Canada. We're already fucked. I got like anything we do here, it's already gone. But anyway, that's the point. If you guys fall, then we're all fucked worldwide. Anyways, next one. I'm gonna push back on chat a little bit. I understand it's a state, I understand it's SCOTUS, whatever, but you got to bring up those. I sent you 3 pages from SCOTUS blog, and I sent you the link. So there was actually a huge decision this year. And it's a takings clause. So basically, takings clause is that when they take something from you, they cannot take the excess value. So basically, when they took like a $40,000 home from this woman or something like that, she owed 15, and they tried to keep it to 25, and SCOTUS said no. Now, the concurring, which wasn't actually part of the overall decision, was Gorsuch and Ketanji. And Ketanji's actually going to be great, better than fucking Comey Barrett on a lot of shit. But basically, they also said they more than likely violated the 8th Amendment, but they did not touch that because they had already decided the 14th Amendment takings clause. So that the 8th Amendment would be an excessive fine, and they would not be able to take the property from you. So that is huge. Again, too, that's a decision of as far as a state versus an individual. But that's the implication now. Is it going to be applied to retail? Like, can your bank take your $250,000 home because you owe like 50 on it and keep the 200. You know.
Yeah.
So that's actually it goes in line with everything today. It's a huge case, and people, that was earlier this year in May. I think they decided that one. So that's, and like I say, Ketanji's has actually been pretty good on a lot of decisions, but then when it comes like the First and Second Amendment, she's shit.
Yeah.
But as far as personal individualism, she's far better than Kobe Barrett, who's always going to say that the corporation is individual, so they get over us.
Yeah.
Anyways, I know you want to get out of there.
Yeah.
There's some things in there. I mean, you need to look up the special drawing rights and see how that goes with the wholesale.
Okay.
Because that's how they're going to sneak it in.
All right.
It's the IMF. It's the IMF. It's already been in play.
All right. Say less. Appreciate you, bro. Special drawing rights, SDRs, units of account for the IMF. How does comprehensive thing? Well, that makes sense. 225, you could call in, bro. Steph Carnell said, HJ, a living legend. Thanks, bro. Dr. Philgoods, he said, HJ, your growth over the past 10 plus years has been absolutely incredible. I'll never forget the first video I saw from you. College is a scam. Yeah, I remember that video. That video was epic. Still relevant to today. That was one of my first videos. That was 10 years ago? Damn, time flies. Yeah. I mean, first of all, thank you for the compliment, but I don't know, it's just the type of thing where when you're an autodidact, you just sort of want to study all the time. And when you can't study, you're sort of miserable, or you get distracted by life and then you can't study. So, every time I get a chance, or if I can pull myself away from studying chess, I try to study, what's important in America. I try not to dive into the bullshit that most pundits talk about, because I think it's kind of too easy to understand, and it's mostly just gossip. And it's just mostly like, and I think that's why it gets clicks, because it's more like soap opera-ish. Oh, this politician said this about this guy. And I'm like, why would I care? He said, I said principal, but I meant interest. If they foreclose, they keep what they got, interest, and take your house. Yeah. 225, you want to call in? I saw you trying to call 225. 225, y'all want to call in? Who is 225? Whose number is that? I don't even know whose number that is. Yo.
Hey.
Oh, Chad, what up?
Just real quick.
Yo, yeah.
Yeah, it's me. Yeah, just real quick. So, to further Jonah's point, this kind of gives me Hillary Care vibes. Like, there's a lot of posturing. Like, oh no, we're against this. We're not going to do this. This is why we're against this, and we're going to have all these people testifying against it. And then at some point down the road, they're going to pass it, and there's going to be some Republicans who used to be against it who are going to be like, no, you don't understand. This is good. Just like when Obamacare passed, they're like, no, you don't understand. John Roberts is a genius. He passed this because now they admitted that it's a tax, and they're going to get it back. Like, no, it's still here. And if they had really had their way, all that shit that happened the last 3 years, there would have been not a damn thing you could have done about it, because it would have all been, we control your health care. We got you by the balls. And so you got to take this and that's where this is going. This is just headed in that direction. I hate to be the bearer of bad news, but the plan has been written, and they're just going through the motions of pretending to be opposed to it. There's some good testimony. I'm not going to lie. Like I was kind of, digging the vibe that I was hearing from your boy, Mr. Michelle, and or is it Dr. Michelle, whatever the hell his salutation is.
Yeah.
But yeah, it was pretty nice. By the way, I'm in line at Chick-fil-A, so I might have to Uncle Hotep. I think I'm going to say my name is Don DeMarco if they ask me what my name is. So I'm just letting you know. If they come up to the window, that's what's going on.
Man. Hey, make sure y'all tune into Aquarian Anarchy podcast. We got one of their hosts on the line here, super genius, Chad. But yeah, it's Aquarian Anarchy. Make sure y'all go check that out.
I appreciate you, man. That's it. Yeah. Y'all get ready. It's coming.
All right, let's have a bill.
Start. Yeah.
Oh man, damn man. I didn't think I was gonna go overtime today. I thought the hearing would be like an hour or two, and then I'd get out of here. But did a 3-hour stream today. I looked at my Spotify comments and So I reduced the Spotify, the audio version, to like the first hour of the Grift Report and the phone calls you got to come to the stream for. And somebody was like, oh, finally, a shorter episode. So I guess the audio viewers want something shorter. So they're just going to have to deal with this one. This 3-hour one, I'm just going to upload the whole thing. I ain't got time to be trying to figure out, you know, what was the first hour and all of that. Yeah, I'm just going to get this whole block because this is a very important episode. For people wondering how they can support the channel, how they can support me, I'll tell you the very best way is to support my company. Support my company that helps me help you, help me help you, or whatever the fuck I just said. But basically, we have our herbal supplement. I had somebody send me an email, right? And this person sent me an email, and they said, I'm currently taking another product that is much cheaper than yours, or significantly cheaper than yours, and it gives me about the same effect. So I asked them, well, what's the product? And then they showed me the product, and I was like, ooh. Now, I don't want to mention the product because I don't know what kind of legal ramifications there are, but we have 1,500 milligrams in our capsules. They had like 1,316. I don't know what the hell's going on with your capsule that it's not an even number. Maybe there's isolates and fillers in there, but anyway, when you looked at and they did have isolates, but it's another story for another day. But they had 1,000, I think it was like, what was it, like 1,000 milligrams of B12. I'm like, this is an energy drink. No wonder you feel like you're focused, because you basically took an energy drink in the form of a pill, but they just gave you B12. They gave you, you know, some synthetic form of B12, or however they cultivate it, wherever they got the B12 from, whatever bacteria they grabbed that from, and then filled the capsule with B12, and then told you, and then filled it with other ingredients. Let me see if I can find that email. 'Cause I just thought that was absolutely mind-blowing that this is what our competition is. And this is part of why I moved into this market, is because I knew nobody could compete with us, because everything out there currently is just pretty much shit. Now, I'm not going to bring the product on the screen. I'm just going to pull it up just to fact check myself. But it was however, I will say this. They are definitely marketing this product very well. In fact, they are marketing this product very well. Hold on, let me go to their website and navigate so I can say exactly what's in here. And it redirects straight to what's the name. All right, so let's go to their nootropic, because they have several products here. So let's go to their nootropic, and I'll tell you what's in their ingredients here, their ingredient breakdown. Okay, here it goes. You ready? You get 1,000 mcgs of B12. Then they have like alpha GPC. We don't do that. They got L-theanine. We don't do that. They got MCT. We don't do that. L-tyrosine. We don't do that. DMA. We don't do isolates. We do holistic. You get the whole thing, because remember we told you, when it comes to brain health, it's not about, see, when people think of, our product, they think like, oh, this thing is like some sort of pill that's going to make me feel good right away. No, that's not what this is. You guys can go get that type of product from somewhere else. Maybe you want to take Adderall or something like that. I've taken Adderall before. Absolutely amazing feeling if you don't allow it to time release. But you're not supposed to do that. Anyway, I'll tell you that story about that later, another time. But you know, when we look at brain health, right? When we consulted Tanai Ricks, who's our chief science officer, when we spoke to our herbalist, our professional herbalist, you know, we looked at brain health not from a perspective of, hey, let's just, you know, nitrous oxide the brain. It was more like, no, let's allow the brain to do what the brain does best by removing the toxins from the brain, and then promoting what the brain already does well, right? And that's why you'll see some of the ingredients in our formula promote neurogenesis, right? Like it allows you to create brain cells, right? Neurogenesis is the creation of brain cells, the things that make you think, right? And it promotes synaptic function, right? But we also, like we talked about before with AK, it attacks the enteric nervous system, which is the second brain. So we're not just dealing with doping up your brain, mostly because I'm afraid of what are the long-term effects of that, right? What are those long-term effects? And we will price match. So that individual that emailed me, I told him exactly what's going on. I said, we compare 1,500 milligrams to 1316 of theirs. We are a purely herbal blend. Their product is heavy on B12, and the price is about 41 cents a capsule. And we decided to price match. I told her we'll price match. So if you guys find a product out there that's comparable to ours, we will price match. We have no problem doing that. But we do offer the most superior product, in my opinion. And we did thorough research in this, but we have the most careful, and when I say careful, I mean full of care product. We didn't look at this as we need our people to see results immediately so we can get a high ROI. That's not how we approach this. We took it as what is going to be the long-term benefits, because we've seen this in the past 3 years with all types of different things coming out of big pharma. They look at the short-term benefits, but they don't look at the long-term ramifications. So we want to make sure we give you the best in the industry, and that's what Master Focus is. So if you want to support me, support my channel, use the QR code on the screen right there, link in the description box below. The coupon code is Grift Report. It's basically half off the product, and we can't wait to have you as a client. I'm going to go right into the commercial right now, and I'll see you tonight for Hotep Has Been Told You, 8 p.m. with Uncle Hotep. And we will be taking Uncle Hotep to Hotep Court, so make sure you tune in. He got some answering to do.
Yeah, I can try to get that handled for you. Again, it's only my second day, so if you can give me a second. How am I supposed to do this? How the hell are we supposed to do this by 5 o'clock? I have no clue. Is that possible? Hey, do you have the password to... How'd you finish all your work already?
He's not tapped in.
How'd you get that done so quick? They think they're gonna be able to budget that?
It's money. That's money right there. You understand?
You guys finished your work 6 hours early? He's not tapped in.